is navigating the evolving M&A landscape in the beverage industry. And we're very lucky to have Brandi Jozwiakowski here from Paragon Beverage Advisors. Randy's the managing director at Paragon. He has over 25 years in the beer business. He's presided over $3 billion in buy and sell side transactions with distributorships. And he's a former executive in wholesaler development at a top supplier. And he's known for clear analysis, honest advice, and practical guidance. Thank you, Brandi, for being on the Distributor Productivity Summit.
Glad to be here.
Okay. And folks, we know on that last one, there was a little bit of an echo. So we've asked our speakers from here on out to wear headphones because we were just getting a feedback loop from the last speaker. So hopefully that fixes that problem. So Brandi, I've kind of noticed that the distributor deals have kind of slowed down this year. Is that a correct characterization from your standpoint?
No, I'll push back a little bit on that, Harry. I think we went through a little bit of a lull for a couple of months, but earlier in the year, I had predicted that there'd be 30 plus deals this year, which is greater than the normal average for the year. And we did go through a little bit of a lull, but if you look where we're at in terms of deals that have been announced so far this year, we're about halfway to that 30 number already. I do think what we're seeing out there is there are more sellers than normal out there. We'll get into it as we get a little further in here, that I do think one of the challenges in getting to an actual deal, though, is that there is a value gap right now going on between buyers and sellers in some markets.
Well, let's talk about that. I know, interest rates remain stubbornly high, and I know that brand valuations continue to be high despite the interest rate being high. What do you make of that?
Yeah, I mean, if you would have talked to us or any of the other brokers or specialists in the industry over the last few years as interest rates rose, we would have suspected deal multiples to come down because there's typically an inverse relationship between multiples and interest rate, meaning that as interest rates go up, prices and multiples typically come down. That did not happen over the last couple of years. And I think it's for a variety of factors, including the fact that some of the buyers that are in the space right now aren't as interest rate sensitive as traditional wholesalers are. So I'm sure we'll get into it a little bit more, but as you get into, family offices and some of those people coming in with money, a slight change in the interest rate isn't going to impact them as much as it would a traditional beer wholesaler that may be a purchaser in the past.
Right. Okay. And what about deal multiples? What are you seeing kind of in the latest deals that you've been working on that we're looking at these days?
Yeah, they're all over the map, and that's been a big change that's happened recently as well too. And I'll show you a slide here in a second, but to set it up, in the past, even though multiples have been going up, the difference between a good market and a bad market may have had a two-turn EBITDA difference, meaning that, if a bad market was trading at a 10 times EBITDA multiple, a good market might have been trading at 12, and that kind of moved in that range. So it might have been 8 for a bad market, 10 for a good market, 10 for a bad market, 12 for a good market. What we've seen lately is that range has greatly expanded. And I'll go ahead and share a slide here on that right now. And we've been using this slide as we've been going out and talking to people both on the buy side and the sell side lately. Is that showing okay right now? Yes. Okay. Yeah. So what we've done is we've put this into buckets and said, if we look at the range that we're seeing right now, on the low end, we're seeing 8 to 9 times EBITDA. And just so everyone's clear, when we talk multiples of EBITDA, what we're talking about is year one estimated adjusted EBITDA for the buyer. So it includes synergies. It's what a buyer would expect for EBITDA, not what a seller had reported as EBITDA on their books. And so, looking at the low end, we would see those at 8 to 9 times EBITDA. And if you look at the characteristics of those people, those people tend to be, geographically isolated. They might have an undiversified portfolio. And what we mean by that is might be predominantly AB or predominantly Molson Coors, but without Constellation or, good crafts or other sources of growth. If you move along to the right, what we're seeing in the average wholesalers is that those people, the difference they have is they may have multiple buyers. So they may have multiple people that are interested in them. So instead of just having one buyer, they have multiple people looking at them. Probably still don't have Constellation, because Constellation has been a great source of growth for people, and people are willing to pay for that. But they do have a more diversified portfolio than the one on the far left. They might include some local and regional crafts and some attractive non-alcohol suppliers. And as you continue to move to the right, you can see the circumstances get better and better. So what we would say in the high range, 11 to 13 times multiples, that they have a diversified portfolio. And it might be a total beverage portfolio, probably includes Constellation, have several interested and well-capitalized buyers, and it becomes an auction process instead of just one person looking at that property. And that people look at these ones as, hey, there's limited opportunities to acquire a wholesaler of significant size, so I'm willing to pay a little bit more for these types of opportunities. And they look at it and they have high probability in future growth. And then the final one, where we're seeing 14 plus, and sometimes even in the high teens, is they have all the characteristics of those high ones, but then they might be in desirable locations, whether that's, Florida, whether that's Texas, whether that's, Nashville, places like that. And people definitely are willing to pay up for places like that because of all the characteristics of the market, plus the fact that they see future growth going on there. So I'm going to
Right.
stop sharing here for a second. So, when we talk about that value gap, what happens is that, what sellers typically see are all of the very high price deals that get announced in your publication as well as others, right? They hear about these high multiples and everybody thinks, well, why can't I get that price? So what we've found is this is a very good self tool, because instead of us going in there and telling them you're not worth that much, we do a little self-evaluation, right? You can throw this chart in front of them and say, which quadrant are you in? And it's a little eye-opening for them. And they say, oh yeah, I'm not on that far right, so maybe I can't expect that type of a price. But the simple answer is right now there is a little bit of a value gap between buyers and sellers.
Right. And publications like ours don't help that. We're like spoiling babies,
Well, those are good stories when you get a big multiple. No one wants to
Yeah.
publicize the fact that they didn't get a good price for their
Yeah,
business.
right. Yeah, those suspiciously go unreported.
Yeah.
Well, and it seems like in the past few years also we've gotten more sophisticated buyers coming into the market, like you said, family offices. And how has that affected deal flow?
Yeah, it's obviously brought in a whole new buyer set into the business. I'll talk about it from a couple different perspectives. From a supplier perspective, again, I worked at a big supplier in my past, and I can tell you that suppliers in the past did not view favorably these types of businesses coming in. They wanted, existing wholesalers to continue to buy up the other wholesalers. The issue became, as wholesalers became bigger and bigger, those deal sizes started to get bigger and bigger as well. And then, some of the traditional buyers could not afford that price or could not finance it through traditional bank financing. And so that's really what brought in some of these other potential buyers like family offices into the mix. I'm going to throw up another slide here because I do think it's very important to talk about the difference between family offices and private equity, because I know sometimes people use those interchangeably, but they're not the same thing. And I think where it comes into play is the type of return that each of these types of entities are looking for. So what we've always told people is, beer distribution is, put aside the Bud Light issue for a second, but on a typical year, beer distribution is not that risky, right? You might be up 1 or 2%, might be down 1 or 2%. In the overall grand scheme of things, it's not that risky. And as we know, the level of return you should expect on investment is tied to the level of risk. So on the extreme case, if you want zero risk, you invest in T-bills, but you're also going to be compensated for that zero risk by virtually earning no return. On the far right-hand side of this chart is private equity. And what private equity does is they look for returns in the 25-30% range. But the way they achieve that is that they are going to get some of their investments that they invest in that are home runs where they make 100 or 200% return on investment. But they also know that other of their investments that are risky, they may lose all of their money on. But on average, when they put a portfolio of investments in, they make a very high return. That's not the type of return that you get in the beer industry. What we always say is beer distribution is somewhere more risky than a corporate bond, but less risky than the overall stock market. And so that's attractive more to family offices. And the difference between private equity and family offices is family office people like Redwood or people like that, they've already made their billions of dollars in some other industry. And now what they're wanting to do is find a place to put that money in a relatively safe place that earns them a good return, but not a great return going forward. So those are the types of people that are now looking at beer distribution and saying, I can put $100 million into the beer industry, earn a decent return, and be able to sleep at night that know that I'm not going to lose my money.
Right. It's a lower return than private equity, but it's these things cash flow out pretty steadily, and there's not a lot of up and down, like you said, Bud Light notwithstanding. And do you think that suppliers have come around more to family offices, not only because the deal sizes have gotten so big, but they just don't want their current big distributors to be completely laden with debt?
Yes, yes. I think that's very key point there. I do think suppliers worry when the deal sizes get too big, that someone can become over levered, and then they're not investing in the business. I also do think it's interesting if you look at it from the two different perspectives, Molson Coors versus AB. Molson Coors has some pretty big guys out there already. Reyes, Columbia, Hobo. There's a number of them that are very, very big. And so they're probably further along in that game than Anheuser-Busch. I think, what you're seeing is, more of these types of deals now starting to happen in the AB, because I think from AB's perspective and from the AB wholesaler system, I think that in a lot of places, they're at a significant disadvantage in terms of scale versus the Molson Coors wholesalers in a lot of the big cities and geographies.
Right. There's just more AB wholesalers, and also they don't have the benefit of overlapping territories that generate those kind of synergies that get deals done faster, right? I mean,
Right. Yeah, and to
it's
that
a
point, when I mentioned earlier that there's a lot more sellers out there, I would, mention that typically those are smaller sellers, and there's reasons that that's going on right now too. Is that multiple reasons? One, what we've seen is the industry trends aren't great, right? They're not, and in the past we used to have pricing, and pricing was good enough that even if volume was down, gross profit was growing, and you could either maintain your profitability or maybe even grow it just through the power of pricing. We're not seeing that anymore. And if you're a smaller wholesaler, that problem gets worse because a bigger wholesaler can adjust to that by taking a route off the street or doing something else in order to adjust their cost, and still, either maintain profitability or grow. A smaller wholesaler, if you only have 4 or 5 delivery routes and you're geographically diverse, it's very hard to take a route off the road. And so if your gross profit goes down, that means your profitability is going down. And then when you add to that everything else that's going on with convergence, that the bigger you are, the more likely you're able to get into sources of growth, like non-alcohol brands or wine and liquor, because they're looking for bigger geographies. It's harder for the small guy to get into that unless they're getting helped by a larger wholesaler. They're not taking part in some of the sources of growth that other bigger wholesalers have. So from a profitability standpoint, it's just very hard for smaller wholesalers to survive. And then throw on top of that some of the things that you talked about at the beginning when you were talking about technology. Technology's greatly changed over the last 10 years or so too, and some of the smaller guys just can't keep up with the technology. So when you put all those things together, I think there's a lot more smaller sellers going on right now, and you're going to see a lot of small guys get out of the business.
Right. It is interesting that before COVID, there were a lot more sellers than buyers. Like I just know from our experience at our beer summit, everybody was haunting the halls looking to buy. And then,
Yeah,
after COVID, and especially since the beer industry has slowed down a lot, it's completely swapped where there's more sellers now than buyers. And yet, like we've talked about, valuations continue to remain pretty sky high. And just privately, I know that some of the big historically strategic buyers are saying that they're going to take a hiatus and slow
yeah,
their roll. And
yes,
I think if you look, I mean, just as an example, if you look at Reyes, they've just been acquiring wine and spirits brands. That's kind of their game right now. They haven't really bought a beer wholesalership in quite a long time. Um, do you why have interest rates not tanked prices and do you think do you think that's coming, even if we get rate reductions?
I think there will be some reduction in pricing. I think that's what's causing that earlier chart that I showed to of the widening of the range of pricing. I think that's the first step to prices coming down, and then I think what may happen is that range will shrink, and the effect of that will be some of the pricing will come down. Back to your original question on the interest rates, again, I think a lot of it has to do with the characteristics of the buyer. So as I mentioned, family offices not as sensitive to interest rates as some of the other people out there. Some of the big wholesalers just simply not as interest rate sensitive. I do think there's other characteristics of buyers out there right now, though, that have kept these multiples higher, and that in some cases, what they're doing is they're buying geographies instead of buying businesses. And what I mean by that is it goes back to my point on wine and liquor suppliers and non-alcohol suppliers want bigger territories. So we've worked with buyers in the past that have said, I'm not only looking at the portfolio of the target that I'm buying, but I'm also thinking, what other brands am I going to be able to bring to this market because of this bigger geography? I'm going to be able to attract other wine and liquor suppliers or other non-alcohol people, or bring some of the ones that I'm already distributing to that market. So, that inflates the multiple because the multiple is calculated on what the seller's current portfolio is. But from a buyer's perspective, they may be saying, well, if this person has $10 million of gross profit that I'm buying right now, when I think ahead and think of all of the suppliers that I'm going to be adding to that geography, maybe I'm thinking that it's $12 million of potential GP within that geography. So I think that's an interesting fact that people look at is I'm buying a geography, not only a business.
Right, right. If you kind of look at what J.R. Hand did in Southern California, he was anticipating uh, getting more brands. And to what extent do you think franchise laws at the state level affect valuations?
Oh, dramatically. And it's franchise laws in not only beer but other things. As again, we talk about convergence because you look at some of these wholesalers that are getting into wine and spirits. If you're in a franchise protected state for wine and spirits, then all of those are valued at the same as the beer. You look at California and some of the other markets that don't have great laws, it definitely affects valuation. As we know, having a brand into perpetuity is great, and it increases the value dramatically. The other thing about that is, as people get into more non-alcohol, and it's been written extensively what happened with Columbia up in Washington, the greater the percentage of your non-alcohol portfolio, that changes the valuation if you're looking to sell as well, right? Because people may not be willing to pay the same multiple for things that aren't protected into the future.
Right, right. And again, if you have any questions, there's a webinar chat. It says we are now accepting questions for Albert. I don't know who Albert is, but it's supposed to say Randy, but maybe I'm reading that wrong.
Yeah,
Um,
so here I want to circle back to your Reyes comment too. I mean, it's very interesting to see what's happening with Reyes in California. And you're right. I mean, right now I mean, if I was them, I'd be doing exactly what they're doing, which is they're picking up brands without the risk of acquisition, right? I mean, they're adding gross profit and they don't have to take the risk or pay for the acquisition. I think what's interesting about that though is that, they are clearly becoming an all beverage wholesaler, which more and more people are doing. What it does lead to, the question of, are we going to see some of the big liquor and wine distributors make the jump to beer? And I would say, I think that's coming.
You think that's coming? Yeah.
Yes.
I mean, Ray is really, if you want to call it, lucked out. But I mean, RNDC's problems in California were legion, and it really presented a really nice opportunity for them. But it's better to be lucky. I always say it's better to be lucky than smart because I've been very lucky in my life. So,
Yeah.
one of the things when you think of distributor acquisitions, there's always like, Uncle Bubba, has been working here for 30 years. What are we going to do with Uncle Bubba? He draws a big salary, but he doesn't really do anything. And so,
Yes.
how do you navigate that as a consultant in M&A?
Yeah, I think it's one of the biggest issues that you deal with all the time, in acquisitions and divestitures, is when there are too many family members, either on the payroll or involved in some other way. I think, what my recommendation to wholesalers is, you have to plan in advance for all of this. Everybody wants to take care of their family, but the reality is there's only so many high paying jobs within every distributor. And then, the other challenge that you deal with, which I'm sure you've heard many times, is when your ownership gets fragmented enough that, it's hard to make a decision or to get agreement on selling. I would suggest there's a couple ways around both of those things that everybody should always be talking about. Is one, there's estate planning tools where you can feed money to your relatives that doesn't mean having to give them jobs or even ownership in the company. And the simple one example that many people do out there that not everybody does is, own the building in a different entity. And if you want to, send some money to other family members that aren't involved in the business, you can have different ownership in the building, rent the building from that entity, and then, they will get proceeds from that. But it keeps them out of the operations. The other thing that I would highly recommend for people is having a clear decision maker within the organization. We've seen too many times when, because all the owners, and it is a splintered ownership group, have equal say, that, the non-employee owners, all they're caring about is, am I getting my distribution for the year? Because of that, they may not invest in things that are good for the long-term value of the business, whether that's an acquisition of a whole nother business or whether that's investing in buying some brands, and they get blocked. So, I mean, there's structures around that too, where you have voting control, voting and non-voting shares, so that it makes it clear that, look, the people that are actually running this business on a day-to-day basis, those are the ones that should be making the decisions, not people that are not active in the business and are just worried about getting their distribution check every month or every quarter.
Right, right. So you got to clean that up, clean up your cap structure. I mean, how does complexity in the business slow down a deal?
I mean, we've seen it many times, as we've talked about, where, it's the right decision for someone to go or to merge. I know that was one thing that maybe we were going to talk about going forward here, but you've got owners that, aren't willing to take on debt because, again, it may reduce their distribution for a temporary period of time. That's probably the biggest thing that we see, Harry, is that you have owners that are unwilling to take on debt to pursue an acquisition because it's a short-term hit to their money that they're going to be taking out of the business, even though long-term it's going to create value for the business.
Right. Okay. And, you know, I know that there's been a lot of talk over the years about doing mergers as an alternative to just a straight out buy. That way, you don't have this problem with taking on a bunch of debt,
Right.
But as you know, there's egos involved. You don't know who's really in charge. Have you seen any uptick in mergers as an alternative?
We have, and it's for the exact reason that you said. The challenges in the past. I mean, quite honestly, we got asked about it a lot, and what we've always said is there's not been a lot of successful mergers in the beer business because you do have all of those hard conversations that you touched on. If you're trying to come together on a merger, you still have to decide, okay, if you're bringing assets to the business and we want to sell a warehouse, how are we going to deal with that? Who's going to be in charge? How are decisions made? Those are all hard conversations to have. And in the past, what ended up happening is a lot of times that merger discussion just flipped and ended up becoming a buy or sell transaction instead. We are seeing more and more discussion on mergers, though, because of the debt piece that you talked about, plus people wanting to stay in the business because they like the business. So people have been more open lately to talking about mergers to get scale needed to stay in the business, but not ultimately sell and then not have to deal with that debt issue where I can't borrow, $60 million to go do a deal. So why don't we merge instead?
Right. Get those synergies and just a matter of getting the cultures together, I guess. Um, we have just a few more minutes left, but what about there's more interest now in soda bottlers getting into the beer industry, even publicly traded ones. What are the challenges of that?
Yeah, I mean, we're seeing it on both sides. So you're right. We're seeing soda bottlers wanting to get into the beer industry. And we're also getting a lot of questions from traditional beer wholesalers about, hey, can we look at a Keurig Dr. Pepper bottler to go acquire? So we're seeing it in both sides. The challenge that you touched on, particularly in the AB side, is that AB prohibits public ownership of their wholesalers. So some of these bottlers are public companies, and so they wouldn't be able to just use their existing entity in order to try and do that. They would have to go through some separation of those entities, become a private group of investors that would do that separately in order to do that because there is a ban on public ownership in the AB system.
Right. You wonder if that's going to change anytime soon because they also used to say no private equity or family offices, and that fell by the wayside at some point. We do have a question from the audience. Who is more at risk, i.e., sellers, Molson Coors or AB distributors?
Yeah, so I mean, I'll answer that two ways. I mean, the first one, obviously, constellation is a determining factor. Whoever has constellation, whether it's the AB guy or the Molson Coors guy, is in a better position. There's no doubt. Um, the way I would answer it, so putting aside constellation, let's assume that neither constellation is not a factor here. Um, and you and I talked about this earlier, Harry, is that if you're in the middle of the country right now, I think I would rather be an AB wholesaler than a Molson Coors from a growth perspective. Just when you see what's going on with the brands right now, that Mick Ultra and Bush are performing very well. And so if you're in the middle of the country or the southern part of the country and you're an AB wholesaler, those wholesalers tend to have a higher percentage of their portfolio being Mick Ultra and Bush. So, in some cases, they may be actually growing this year from a volume perspective. That's very different in other geographies for AB. So that answer may switch to Molson Coors is better in some geographies. Let's take the Northeast as an example. The Northeast, if you look at some of the AB houses in the Northeast, they're still very heavy Bud and Bud Light. And if most of your portfolio is Bud and Bud Light, then you're in a world of hurt right now versus some of the
Right.
your comparable people in the Midwest. So some of it is geography based.
Right. And I mean, does it really come down to if you have Constellation or not? Is that if you had to pick like one valuation determination, is that it?
It's the most important one that we've seen over the last 10 years probably. Obviously they've slowed their growth a little bit this year. Don't know how much of that is related to other factors, and they may go back to to growing in the future. But yes, I mean, what we've seen, back to my multiple slide, is that, just having Constellation alone can be 2 to 3 times turn on EBITDA multiples just by having that versus not having that.
Wow. Wow. Well, a lot of great information, Randy. Thank you so much from Paragon. You guys do a lot of great work, and I appreciate you being on today.
Thank you.
All right. Take care.
Bye.
On. Okay. Well, our next speaker is Clay Kobernick, Vice President in Category Management and Delivery Solutions at Rehrig Pacific Company. These guys, I mean, Clay, I'm just going to let you say what you guys do, but you guys build products that make delivery much easier into different kinds of accounts, if I had to say it in one sentence, right, Clay?
Yeah. Good morning, Harry. Pleasure to spend some time with you. So, yes, Rehrig Pacific, 100-year-old company. For the longest time, we were mainly focused on core plastics throughout several different supply chains. Beer and beverage, absolutely one of them. Around 10 years ago, looked at creating delivery systems, so power delivery equipment that would look to optimize safety, driver efficiency. And then more recently, within the last 5 to 7 years, then looking into a suite of technology products, same application. So improving operator performance, safety, efficiency, providing visibility throughout the supply chain. So a lot of that is understanding what we are delivering has significant impact on the status quo. And Harry, you had a perfect lead in, the side loader truck in the 60s was the last real big innovation within the beer space. Then moving into some automation and, also then moving away from the hand truck to specialized delivery equipment. So there's been this snowball effect of change within the last 10 years that's pretty disruptive to the current process, the roles, the responsibilities within that warehouse and delivery, and that's created a lot of friction.
Right. And talk to us about some of the new tools that you guys are fronting out here.
Yeah. So, like I mentioned, starting with core plastic. And so many of our distributor partners are probably operating on a few different pallet types, primarily the brewery pallet. Maybe there's a Constellation pallet as well, like we just talked about a moment ago, or a CHEP pallet 4048. And so a lot of that is great for the warehouse. It's very easy to build on, but there's a significant impact to the driver. So looking at, can we create a delivery pallet that speeds up the delivery process for that driver, gets that product to the point of merchandising with as little to no impact to their operation, because that CDL licensed driver is so valuable to that organization. And so that makes a ton of sense. But there is definitely going to be an impact to the warehouse. And then looking at some of the technology, whether that would be automation, AI-based technologies, asset management, digital engagement with the retailers. There's some different things that we can do within the warehouse and delivery that provides a lot more benefit to all roles within the organization, but primarily, again, it's a benefit to delivery.
Right. And can you show us some of these, like these powered pallet jacks and things that you have over there?
Yeah, I could pull it up. I don't have it handy for me right now, but I'll give an example to one of them. So you have the Duo Lift. There's a few other delivery specialized pieces of equipment in the industry as well. We're starting to see a trend towards that, but it's a piece of equipment that is powered, and so it's replacing the traditional electric pallet jack that has fixed tines, takes one piece of equipment from the trailer to the front of the store, where then that practice of down stacking onto that hand truck or cart to bring into the actual retailer, all the way into that beer fridge or to the cooler, where they're going to have to down stack again and merchandise it. So can we eliminate that step? And so the way that the Duo Lift itself works is it's got movable fixed tines. So you've got the fixed tine when it's in the outward space that can handle both a brewery pallet, but also it can retract and become a shorter dimension tine, where it can then take a delivery pallet, which has a 20 by 48 dimension pallet through a actual entrance of a retailer. So I eliminate that additional case touch and get it in point of delivery.
So a narrower pallet, so you
Yep.
can go through the front door of a C-store, basically, instead
Correct.
of having to restack onto a hand truck.
Yeah. So exactly, which makes a ton of sense. And I think there's immense value, and you're starting to see the industry trend towards that. But that's kind of the framework for this session, is that there's a lot of new innovation, whether it's from us or some of our other vendors that are in this space, that is starting to become more prevalent. And you look at distributorships that are investing in whether it's delivery equipment, digital tools, automation within the warehouse. There becomes this need to ensure that that change management is actually handled appropriately. And so what you see is this tension between whether it's sales, delivery, or the warehouse. They have competing focuses. For the longest time, they probably have different reporting structures, different leadership. They are compensated by a certain practice. So, for example, with the warehouse, it's probably cases per hour. Maybe there's a certain volume or speed metric that triggers a bonus, and they're picking on one pallet type. They become very specialized at it. And to change that, whether that's introducing a new practice or a new pallet type or a different process where it's semi-automated and still a manual process, there's going to be a lot of nervousness in that change. And it may slow them down. It may hurt their compensation. So they're going to push back from that. Additionally, the way that status quo was in the warehouse has an impact on delivery. And you talk to distributors who say, I've got 30 routes, but I'm lucky to get 28 drivers this day. That's a huge impact. So how can I change my delivery practice to benefit the drivers? Maybe it's used as a way to acquire new drivers. It's a competitive advantage. Or at a bare minimum, I can take 30 routes of volume, and now I can load my trailers because I've got a faster process during delivery. I can load my trailers with only 28 routes. So now I'm maximizing my trailer loads by weight and not by time, because that delivery process, when I actually go out, I'm paying those drivers to deliver and get back in the truck, not to have to merchandise downstack 3 or 4 times during that process and really slow down. So how do you manage that sort of that disruption within supply chain, and quite frankly, where there could be some conflict if one change or one practice benefits one organization within that company versus a different organization?
Right. And so, it kind of is, you got to make a decision whether do you want to stack it onto a non-beer narrower pallet in the warehouse, or do you want to have the driver pulling it off the truck and stacking it? Somebody's got to do the work. It's whether you want it in the building or out in the trade,
Sure.
right?
Yeah,
Okay.
and there's certain technologies that are going to help with that. So it's not just delivery equipment or pallet type. There is a surge of automation, whether that is fully automated systems where you got pick mods and downlines, or the Verticuse type where it's fully integrated. I'm going to build layers. I'm going to build those pallets. There's other ways that we're trying to not eliminate labor, but get that labor doing the right work within the supply chain. If there's non-productive things that I can take off of their workload, where it's going to make them more efficient. I'm doing less physical labor. I'm going to make them less tired throughout the day. So there's a less of a chance for error just because they're mentally drained. There's a less chance for injury because all it takes is one time where you slip up and you've now got a 30-pound case dropping on your foot, or you're damaging product. But also because I'm having them actually do more thought critical work instead of just tactical labor, I'm going to make them more efficient. They're not wearing down as much. I'm allowing them to do more and using their brains instead of just that brawn.
Right. And it also is a benefit in driver retention, I imagine, because
Oh yeah.
drivers are hard to keep. These CDL drivers, they get their CDL, they think they're going to be a truck driver, and they're like, "Oh shit, no, I'm actually stacking cases and unstacking cases for a living." And making it easier on those guys is I would imagine a huge benefit.
It's a huge part of it, and also just increasing the labor pool. So you mentioned it. For the most part, it's an aging workforce. You don't see a lot of younger individuals coming into this space and saying, "I want to drive a truck, and I also want to sling 30-pound cases." And so, how do you protect that labor force that is aging and extend that workable life of theirs, but also expand the labor pool? So, can I make it more attractive for younger people? Can I make it attractive for non-standard driver profile individuals that maybe it's females or people that aren't as industrial athlete? Can I open up this job to them as well? And so, yeah, there's absolutely a competitive advantage, but also yes, it's competitive, but it's also just to sustain their operation. And so, whether I think COVID kind of highlighted this, but you're going to lose drivers. The acquisition bonuses that competing, like whether it's food service, beverage, beer, or just over the road transit, the competitive bonuses to acquire drivers are becoming more profitable. So you see people jumping around. So not only do you have an aging workforce, but you have a one that is less willing to work at an organization for 20 years. They're more willing to job hop, but they're also looking for the easiest, as you should, you're looking for the easiest job that they can do. Why would I want to not move thousands of pounds throughout my day versus just come there, use a powered piece of equipment, drop a pallet off, and then get back on the road?
Right. Well, and that brings us to Hernia Alley, which is the keg delivery. Um, you know, I, the old timers that delivered kegs, if you weren't missing a finger or didn't have multiple hernias, then you really weren't doing your job well. So, there are alternatives now, safer alternatives. Describe that for us.
Yeah, so there's a push, and you want to talk about change. This is a significant change. So you look at a standard distributorship, you've got on-premise, and then you've got your retailers. And so if I'm having an on-premise route, I have a side loader truck, I have different delivery equipment, I have a different delivery process than if I have a route going out that's going to go to a bunch of retailers where I've got a rear lift gate, I've got a powered piece of equipment, and I'm going to go and merchandise that product. And so not only do I have to have two different types of infrastructure to actually manage my day-to-day operation, I have one of those that is just archaic. And so how can you look to leverage a single set of infrastructure? Preferably the side loader would not be your future state. You move to that rear load with a power piece of equipment. And then you say, okay, and then can I take a manual process where I'm dropping a keg from anywhere from 2 to 6 feet up and then moving that in on a dolly? Can I use a powered piece of equipment to do that? Sure, yes. Let's build a pallet that's got interlocking rings and a powered piece of equipment that is gonna, you can be able to put those kegs on there, get to at least the point of delivery, if not get into the keg room. And then you start to look at what can I really do around change management? Can I unitize my loads? Can I mix my on-premise with retail delivery so I can blend my routes and just focus on a geographical area versus an account type? That's where it becomes really exciting, but at the same time, it creates a lot of disruption within the warehouse. So how do you manage that change? How do you get everyone within the process on board with that, from the individuals within the warehouse on how they pick and how they build routes, to the delivery teams, to the sales teams, to your accounting teams on how you manage these different types of routes?
Right. Um, okay. And what is this AI image capture? What is that about? Speeds up check-in and improves accuracy.
Yeah, there's a handful of different technologies that are coming into space, whether it's automation, AI, deep machine learning. There's different processes, and it's around eliminating unproductive labor, not eliminating the head, but eliminating roles that can be automated and allowing them to be more productive. So specifically within AI, your typical distributorship is going to QC product a few different ways. They're going to do a case count. They may weigh that pallet versus expect it, or they may do a percentage spot check. So that's going to take time and energy of some individual throughout that process. Can I automate that? And then can I use machine learning to do that as well and have an AI-based system that can actually go and do that on their behalf? And so there's a big change there. And so that process now becomes building that order, QC in that order, whether it's counting the cases, visualizing brands, weighing that product, making sure that it's meeting the expected order accuracy and going out the door a correct order to eliminate retailer disputes or hot shots or lost product out in the field. And so when an individual within the warehouse hears that, their first thing is that job is going to get cut. I'm getting eliminated. They're automating my job. And that's not the case. They're still going to need someone to put that product on that pallet. But can I automate this particular practice, give them a little bit of a break, allow them to go back to order building, create some specialization within those roles? And so there's a practice that I really prefer called ADKAR. And that is, it's an acronym for awareness, desire, knowledge, ability, and reinforcement. And what it is it's a way to manage change management at the individual level. And so when I introduce any type of change within the warehouse, I know that it's going to impact several different roles, whether that is the individuals who are building orders or loading trucks or delivering that product, or even the salespeople that are building those orders? Have I thought about how the change that I'm trying to introduce is going to impact those individuals and run through that and actually make sure that I'm tailoring the why, which is another part of where you see best practices with change, is am I explaining the why to them to get them on board so that everyone understands from a high level, this is why the organization is moving in this direction. There's a net benefit to this organization, and handling it at a very tactical level around I understand that this is going to change your day to day. I understand that you may have some fears. I'm going to create the desire for you. I'm going to give you the skills and the knowledge to implement this change. And then I'm going to reinforce it by just ensuring that the change management that we introduce to this, you're not doing this alone, that you have a team that is going to help train you, create best practices, reinforce those best practices, and then encourage when adoption is had.
Right. And I mean, you've addressed some of these, but what are some of the pain points in changing the way that you deliver these products, on different pallets?
Well, yeah. So it seems simple, moving to a different pallet type, whether it's adding a new pallet or changing the delivery mix of what you're going to deliver on. You're putting product on a pallet. It seems like it wouldn't have a big impact, but you've got to really look at the end-to-end impact of adding or changing a pallet type into your operation. Is it in your RAS? Do you know how to build on that pallet? Are there some best practices? It's very easy with a brewery pallet to create interlocking layers. They've been doing it for decades. There's a well understanding, and there's been a skill set that has been refined by those individuals who put product on pallets that you're now disrupting and you're completely changing it. And so you have are our systems ready for that pallet? Can we actually introduce a new pallet type into that RAS? And then you go to that first level of that individual who's going to pick up that pallet and have to build an order. Do I have the institutional knowledge on how to build on that order, do it effectively, not lose productivity? I want them to be just as fast. And then I also want them to do it safely. And I want them to be able to do it so that my orders are secure. So I don't drop pallets when I'm delivering product because there's unsecure loads. And so very minor change has an impact right there. And so I got to work with that first individual and ensure that they have the tools and skills and the knowledge needed to implement that new change so that they don't become resistant to it. Because the last thing I want to do is I'm clearly, no one has introduced a change into operations with bad intentions. They've always done it with the right intentions in mind. Where the failures happen is a lack of planning and a lack of execution. And usually that's because someone throughout that process has been forgotten about and they feel like they're left out, or they're fearful for their job, or at a bare minimum, they're resistant because they felt like their input wasn't taken into account, and that we haven't holistically looked at what we're going to do, what we're going to change, and how we can ensure that everyone is bought into this new process. And so that's where that approach to understanding each individual's impact into the operation really matters. And so you change the way that you build that product, and then you got to change the way that you load it. And so there's a loading methodology on route and stop 1, stop 2, stop 3. And so have we walked through that process? Have we ensured that not only does the loader have an easy process in loading it, but that when that trailer is completed and that door gets closed and that driver goes to stop 1, I've also improved the driver's life. And so I'm not having to maneuver pallets around to get to that stop and actually go and deliver it. So there's a lot of impact that certain individual is going to have an impact to just based off of something as simple as a pallet change, let alone something very large like bringing in AMRs or changing automation and completely changing their roles and responsibilities. That has the same practice of understanding each individual, but you have a much larger impact there. And that's where that explaining the why really matters. And the way that you see that best, I will give credit to the beer industry. Distributorships, you see a much better engagement at the executive level, that one stakeholder who is going to explain through delivery, sales, warehousing, the why of we're doing this, the executive sponsorship, hey, we're invested in this, we're invested in you. Where you see that not happen as well are within other industries like food service or beverage. And so I will give kudos to the beer space. I think you see a much better early on engagement with executives who are saying, we are behind this process and we're behind you, and this is why we're making this change.
Yeah, I mean that's because most of them started on the truck.
Absolutely.
I mean, right, Bud? You started on a beer truck. They didn't just put you in as vice president of on premise, which is such a bullshit job. But yeah, no, and beer is heavy. I know you've heard me say that beer is heavy, and let's let the robots pick it up and put it down. Let's let hydraulics do the work. There's no need to be, and also, let's work on reducing workman's comp uh, and just protecting these drivers and really treating them like the princesses that they deserve to be.
Well,
So,
and I will say that's a that notion of the industrial athlete, there's a gap there. And you can look at someone that's very muscular. I'm not that guy. I would struggle on a route. But I was meeting with Ohio State University, and they've got a spinal research institute. And they brought up this fascinating graphic. You looked at a person like me, and then you look at a person like who's an industrial athlete who's been slinging cases for 20 years. Your skeletal makeup is the same. Doesn't matter how much mass you have on you. The practices that you have, whether it's bending over, picking up cases, picking up a keg, not natural movements, it doesn't matter if you are 250 pounds or 100 pounds. It's still the same strain that's on that skeletal muscle. And you're going to wear down and you're going to have injuries. It doesn't matter how strong you are. And so, yes, absolutely. The industry has to be moving towards sustainable practices. And I think now more than ever, these past 10 years, we've got specialized delivery equipment that can make that job safer. And
uh,
I just think it's something that's very exciting. But at the same time, for the people who have been doing it, that are lifers, it's very scary. Change is always scary. And so how do you manage that sort of learning curve and constant check-in? There's an A3. A3 is a problem-solving method, and there's a step within A3 called PDCA, and it's plan, do, check in, and adjust. And so when you introduce a new practice, it's going to have an impact on your organization. And so what is that check-in process? And then that A3 problem-solving methodology of when you introduce change, you had a desired future state of where we want to go. And what is the current state today? Is there a gap? What is the root cause of that gap? Is it a people process, just an environmental challenge? And what are our countermeasures to get us back to that desired state? You can't just drop in change within an operation and assume that it's going to go smoothly day one. There's got to be that reinforcement and that check-in, both from an efficiency and an operation level, but also the people.
right. Well, that's a good place to stop. Thank you so much, Clay. I appreciate you being on the DPS today. And we're going to take a 5-minute potty break and we'll be back.
Thank
Thanks,
you, Harry.
guys.
When growth is uncontrollable, then you have to invest in profit because the profit makes you stronger. The profit allows you to weather the storm, and we're all living in some version of that. When growth is uncontrollable, then you have to invest in profit because the
Yes, can you hear me? Awesome. Uh, yeah, why not? Why not? Feel comfortable, look good, perform good, right? That's what we're here for. I can hear it. Yeah, yeah. I'm doing well. How about yourself, bud?
Hats at small distributors. One of them was pricing. I got fired from doing pricing because I sucked at it so much. Which, if any pricing coordinators are on the call right now and they want to get fired, just start doing a bad job and you'll eventually move on to another role. So, but if you don't and you need some help and you want to talk about how to more efficiently interface pricing with retailers, that is what Mike is here to talk to us about today with the special secret sauce that 99 Bottles has. So, Mike, welcome today, my man.
Hey, bud, I appreciate you having me on here. Excited to dig in and kind of talk about pricing, communication to retailers in the three-tier system and, how we're providing efficiencies and value to wholesalers on that end. And, excited to kind of dive into everything we offer on the wholesaler end. And if we have time, maybe talk about what we're doing with retailers too. That helps wholesalers as well.
Love it. I'm sure we will. So, Mike, you've been with 99 Bottles for the last 8 years. What are the things that you are doing specifically with wholesalers, working with your distributors on how to integrate pricing better between our chain, and it's primarily chain retailers, right?
Yeah, that's correct. Yeah, just a little bit of background about myself, right? I've been in this industry, for almost a decade, and you've seen pricing, kind of all aspects of it. At one point, I was in charge of pricing submissions to retailers, and kind of you see the struggles I would say wholesalers have, but I'm not sure if you have any experience. I know you were part of a wholesaler with pricing and how that goes to retailers, but um, for whatever reason, it seems that retailers make it a little challenging to get pricing in the system where you'd think they'd want to, make it as easy as possible. It seems they put a lot of the burden on the wholesalers, and many times it, is very time consuming for them. So today I just wanted to talk about, what we're doing on our end to help wholesalers kind of alleviate some of those struggles and those pains and help them bring that value back so they can spend more time on value adds to the wholesalership and less time, plugging away, keying in spreadsheets and, just making them overall more efficient.
Yeah, it sounds like retailers are using our labor and the complex process of spreadsheets and taking what we've got in our route accounting system as the central source of truth of pricing and bringing it into a complex Excel sheet and then one way, shape, or form, like uploading it into maybe a portal in some way or sharing it with a pricing coordinator on the retail side or just emailing it off to an email box in La La Land, right?
Yeah, I wish I could tell you there was one way that everybody did it, but unfortunately, that that tends not to be the case. If a lot of wholesalers out there and a lot of, if the wholesaler, if the people on the call are familiar with pricing, I'm sure they can relate to this, but you might have 30, 40 wholesaler or retailers that you're servicing in a given, route or operation. And unfortunately, each retailer is going to have a different way that they intake pricing. So that's 30 to 40 ways that you have to learn to submit pricing to them. And sometimes, they have a spreadsheet and it's simple and not too complicated, but you're still adding time to submit pricing and get in there. And sometimes it's more complex, convoluted. In some cases, it doesn't make much sense of what they're asking for. Some retailers can't even get out of their system what you currently submitted to them. And it's a little mind blowing, but that does happen. And then you have some that have their own portals, and the portals go in and they require you to submit pricing for your authorized products in there. Many times it's not as user friendly as I think it could be, and it actually causes a lot of pain for the wholesaler to get pricing in as you might, submit it, they might reject it, everything might look good, and now you're doing this, grab trying to figure out where the issues are so you could get that pricing in. And at the end of the day, it's you're not doing rocket science, or we're not doing anything complex in terms of like getting the pricing. It's just you want to deliver it to the retailer so your products can go in the door and not get rejected. So, we're here to try and alleviate a lot of those issues and provide value to the wholesaler to let them keep, doing what they want, and that's delivering beer to retailers and getting it in the hands of the customer.
That's awesome. So we talked about the problem. You've got a solution. Where does that solution start to come into play? How do distributors partner with you to streamline this? What does that look like from a technology side and from a human side of interfacing with 99 bottles instead of moving everything in and out of these complex Excel sheets?
Yeah, so I would say the service offering that we offer to wholesalers, we call it our full service offering. And what that is it offloads all the work that the wholesaler is doing within these spreadsheets and portals and puts that burden onto us and my team. We then assume the responsibility to submitting the pricing to your retailers on your behalf. I'd like to say we're route accounting system agnostic, so we don't care what route accounting system you use. We can connect and have APIs to a number of ones already, but even ones that we don't have, we're willing to build and work with you to get that pricing out of your system efficiently so we have visibility so that we can deliver it to your retailers. That works in very simple ways where, we're in charge now of submitting that pricing to your retailers, filling out their spreadsheets, going into their portals, doing all of that so that they get that pricing and making sure that, the time spent on the retail or the wholesaler side should go down drastically, at least 90, 95, in a lot of cases, 100%, because you're not worried about filling out those spreadsheets anymore. You're not worried about filling out the new item forms for authorization. Me and my team are responsible for taking on that and filling that information out, getting that submitted to your retailers on the defined periods, that defined cadence. Could be monthly, could be quarterly, could be yearly with price increases that come around, or the always fun but over price increase or just random price changes come out of the air and you're moving for whatever reason, and we accommodate that as well. So a lot of this value comes with wholesalers that when I'm talking with them, they say our CAMs are currently the ones submitting pricing for us, so they're going in, they're managing. Now, when they're submitting pricing, they're not able to be out in the field. They're not able to make those decisions with retailers like, what should we be buying? So that's just one of the many jobs that they're responsible for. Another one is, we're talking with, the actual pricing department, and they're saying, they'd like to do other things and connect other areas instead of just be face down in a spreadsheet and submit. So we give them that time back. So it's all about that value add and that time, getting that time back that they're able to then do value adds that they're able to make more decisions than just looking at a spreadsheet, keying it in. So we use technology on our end through the pricing that we receive to run those spreadsheets, confirm pricing, see that information so that we can get new item forms out, and definitely keep the wholesaler involved so that they know what's going on as well.
So it sounds like wholesalers keep their route accounting system up to date with what their most recent pricing is. 99 bottles connects virtually with an API to actually do that integration. And then you make it all happen on the magic on the back end through, is it outsourcing some labor and also technology, or is it primarily mostly the technology platform that 99 bottles is built off of?
So definitely our team, we have a dedicated team of support analysts that are assigned to the accounts that come on, and they do nothing but make sure that that pricing is in our system. We set up those API feeds right out of your route accounting system. What happens is the wholesaler is now responsible for making sure the route accounting system is up to date, which I think is, good data in, good data out, the age-old adage, where, their main concern now is making sure that the pricing that we want to deliver is in our system. It then gets communicated over to us, and we have that through the APIs that you referenced and the things that we set up, and we work with you to identify your price zones, how many different variations you may have within your market, and then work on that. And then I have my team that's, like I said, just dedicated, real people, real work that they're going in and executing the files using our technology to make that happen. But they're a real person. You can pick up the phone, give them a call. they'll, email them directly. It's not a automated system, or, we're not doing anything on the back end to deceive you on that end. Just real people that are working to help you and provide value on your end at we think, a very, beneficial cost on the wholesaler's end, and, something that we've gotten a lot of great feedback for. Initially, how this all got started was we, having just general conversations with wholesalers and finding out what pain points existed. But I'm sure, I'm sure you're aware, right? Pricing sometimes is the last thought on a lot of people's mind, and not a lot of, it's not the most, I'd say, sexy job. And it definitely, isn't one that, I'd say a lot of people, love to do, but, it's a value that, I think it's overlooked in some cases, because that's the starting point of everything. So if your pricing is incorrect, it's a streamlined process. And, within the 3-tier system, it's everything. It's one giant circle like that. Just everyone's connected everywhere. So if you get that right from the start, you're off on a good foot and able to, make sure the next place gets what they need, and the dominoes seem to fall from there. So
You're 100% right. Like, as the chain business has grown more and more and more, this is a roadblock. Having challenges around submitting pricing in the chains become a genuine roadblock to selling more and more product. And if you're in a very chain heavy market, like many, many markets, Texas, here in Texas, where we are right now, where you are in Florida, both very chain driven markets, if you don't have your shit together and you're not communicating this pricing efficiently, that negatively impacts sales. One of the things you touched on real quickly is around key account managers, where we've got a salesperson, somebody who is actually engaged with a relationship around selling product to a retailer, that you're actually buying time back. So it's not just an admin project, it's also potentially a time to sale project buyback for those CAMs as well.
yeah, absolutely. I get a lot of feedback that, the CAM, prior to getting signed up with us, they're like, I just want to spend more time in the market. I want to, make better decisions with or help the retailer make better decisions in order what they should be buying. If, Florida is a big QD heavy state, there are others that likewise, and even the ones that aren't, they just want to have those conversations. And sometimes monthly, quarterly, they have to spend a large majority of their time plugging away at these spreadsheets that necessarily they might not want to be doing, but they have to. And I'd say, most of the time after they're done plugging away, I don't know if they're reviewing it all that much, but they just want to get it off their plate, send it, and they'll worry about the back end when it comes, if there are any cost variations or inaccuracies that may have, been inputted. So this helps them, I would say, get that time back, but also focus on more value adds to the wholesaler. So where other areas that their time's not being taken away, they can add where they may not even be thinking about it, when they're doing the spreadsheets and emails and the portals and all that good stuff.
So, Mike, we've got a good question from Andrew Lohr. This sounds like an easy sell to wholesalers, but how do we get our customers to sign on to do this as a distributor? Do you need the retailer's buy-in from doing this in any way, shape, or form?
No, not at all. So the retailer we just tell the wholesaler to notify your retailers that, hey, moving forward, 99 Bottles will be in charge of your pricing communication. Not necessarily they need to be involved. If we have time down the road, we could talk about our retail model and what we're doing on the retail end. And I'm sure a lot of wholesalers on the call might be familiar with 99 Bottles or using it in some capacity already, because we do have some connected retailers on that end. But what we're discussing right now is a different service that's just wholesaler specific, and provides value on that end. So the only thing you need to do when getting signed on, after besides all the back end works, is just letting your retailers know, hey, moving forward, 99 Bottles will be in charge of my pricing communication, and just so the retailer's not caught off guard, right? So if we were to do it on our own, sometimes we get the, hey, are you a phishing email, or are you trying to steal our data? Like, what's going on here? So just want that information and that communication to come from the wholesaler. So it's a defined, contact. So we kind of get off on a good foot, but nothing the retailer changes. I tell all our clients that we come in, our team isn't reinventing the wheel here. We're just assuming the same processes and in place that you currently have, and just picking them up and just providing the same, value or the same process that you're currently doing. Just we're taking on that work so that you can offload it and get your time back.
Do you ever have any concerns with distributor partners around taking over this mission critical project? And can you touch on real quick around what the interface is back and forth, not just technology wise, but more around like interfacing with the pricing coordinator or the CAMs that will still be there. They'll still have these team members on our teams. How are you going to interface but take that manual non-value added out? What's that look like, just to make sure that wholesalers have a knowledge of, hey, this is pretty important. This is mission critical. If I'm going to move this onto your plate, how do we make sure we stay in lockstep with each other?
Absolutely. So, one of the questions I get all the time is like, how are we, are you writing us out, or are we being, taken out of the loop here? We want to make sure we have visibility. And, what we're doing is, I like to say, we're just a cog in your machine, and we're not trying to write anyone out anywhere. We're, basically how this all kind of is connected is, anytime we're talking with a retailer, we CC that appropriate CAM or person from the wholesalership that is our point of contact. We keep them in the loop. If we have questions, we reach out at the end of each month. We have a defined, I'd say we call it our chain checklist. It's basically just a way that we can identify all the work that's been done when it's been submitted, so that you have that visibility, so when all of that has been worked on and completed. That file can be requested at any given time, and you can see a status of where we are at a given month for submissions. If we have questions, we reach out to that point of contact or that CAM directly, or go to the retailer when we have built that relationship to say, hey, what do you need? What we found in a lot of cases is, unfortunately, retailers don't do a good job of telling you exactly what they want. Sometimes the wholesaler is providing them a lot of data, and they think that all of this is good. And then we only find out when we start working with retailers that they can't even take in all the data you're sending. They want it as simple as possible. So if you provide them everything under the sun, it's almost data overload, and they don't know what to do with it. So we're here to, sometimes if there isn't a defined process, just figure out like what exactly do you need? What would make it easiest for you to take that data, take it, and if it's following the same process they currently have, so be it. If it's finding a different way to send that data, either with some cleaner forms or trying to get them to change in some way, we try to have those conversations to make pricing communication more efficient, but also just more efficient, more effective, and just a simpler process. Because I've always been a big proponent of making it less difficult on the wholesaler, not more. And I think the retailers, based on how we've currently doing it, I mean, spreadsheets and emails have probably been around for 20 years at this point, and we're trying to get as much as we can off of that, but retailers tend to act slow on their end, and I get it. But we're just trying to help out and make this minute area of pricing as simple as possible, because we think there's more value in making clean data being transmitted correctly.
So I see a question from Sean. Sean, I'm going to come back to yours in a minute when we move over to the retail side. But there is a question, Mike, in the wholesale side where you're partnering with distributors first. Do you see any templates that you can't replicate? I mean, you're working with, how many different distributors now? And I would venture to say you've probably seen an economies of scale in terms of how many different templates you've managed. If you're managing all of, a wholesaler's distributor's business in Michigan, you're probably managing an overlap of chains across multiple distributors in one state, right?
Oh, absolutely. I mean, we have a bunch of national chains that are blanketed throughout the country that we've seen. I would answer that question with, there are some files that are harder than others, so we have to spend the time to learn that process and understand what needs to be submitted. I don't want to mention any names, but there are some files that are, I like to say, it doesn't matter who takes it on, somebody's going to have an issue with, just based on how they submit pricing. So I don't want to, throw anybody under the bus, but I'm sure everybody has a couple in mind that you can identify and say, yeah, that one is painful. I greatly would love to never talk to them again, but I'm submitting files to them, and we have to do it. So we're gonna go about it, but we learn the process, we go through it, and we try to get it all squared away.
So the next piece of the puzzle here is, let's pivot, Mike, and talk about the retailer relationship you have with retailers. So when you work with retailers, what does that look like, and how does that come about? And let's start with just you approaching a retailer perspective of partnering with them to start with. Let's go there first, and then maybe we back into how distributors might actually approach a retailer in their direction.
Yeah, definitely. I mean, honestly, bud, one of the best leads that we get are from wholesalers that go, "Hey, you need to
Okay.
check out 99 bottles." I mean, I don't want to say, but you run the risk of it's almost a race at this point. Eventually everybody's going to get off spreadsheets and emails when that may be. Who knows, right? It could be 10 years, could be 5, could be next week, who knows? But whenever you allow a retailer to build their own system, they make assumptions, and I'd say the dev teams usually aren't that connected with pricing. So there could be some portals out there that I know very well that are awful to work in and cause a lot of pain on the wholesalers end. One of the differences on our platform is when we built the model, it was people that were connected in the 3-tier system. So we know exactly how to make it as user-friendly as possible and what we need to deliver. The retailer sees that, though. I think we get a bunch of wholesalers reaching out, like, how can I get more retailers to connect here? Because it has greatly improved our pricing, our margins for our product, that line of sight. And I'd say, that's a service that we offer to retailers, and, there's everything that goes along with that. But when the retailer is being heard by multiple wholesalers to check out 99 bottles, they start to reach out to us and, get a demo. We're one of the only platforms that can connect, with multiple route accounting systems and automate file feeds directly into our system to streamline that pricing communication for authorized products for a wholesaler or to the retailer's authorized products, and allow that line of sight, but also that ease of communication. So when you're making updates in your route accounting system, we're getting updates in our system. The retailer is receiving that in a instantaneous fashion in a lot of cases, or within 24 hours. And they're making better buying decisions. They're getting better pricing on their end. And that all kind of wraps up into, more competitive retails, more competitive sales, more cases being bought on their end from the wholesaler to try and, make their side as efficient as possible.
So in that relationship, does the retailer sign an agreement with you and the wholesaler just submits automatically? It just all kind of works in the background then?
Yeah, definitely. So instead of spreadsheets and emails, when retailers join with 99 bottles, that spreadsheet goes away, gets
Okay.
removed from the situation, and all pricing communication is handled in 99 bottles. There are still some aspects in 99 bottles that the wholesaler needs to manage. So when we take on that wholesaler in 99 bottles, like a customer, so to speak, we're probably the best at managing our own system. So the distributor is also getting that added benefit of those new item submissions, making sure that the pricing is what we would expect based on visibility, throughout the entire, markets or wholesalers that we have. And, we can then, reach out and see if we see different variations or different things that come up, and confirm that pricing, and basically provide that I would say, good data in, good data out theory to kind of bring it to life. So, that is a retailer specific model. We have another one that's specific to the distributors, but in the end of the day, everybody's connected at the hip in some case, because we're all, trying to really get to that end goal, and that is getting the product in the customer's hand and making sure that there's no hiccups in between.
That's awesome. So let's go back to Sean's question about connecting with major retailers or major chains. Is there anybody that you like to talk about mostly as like a top performer or a group of chains, or is there a type of chain user or chain account that does a lot of good business with you, deep in C-stores, deep in grocery, or anything specific that you want to touch on, just so the brand or just so the team out there listening kind of gets a feel for maybe some of the retailers you're already working with right now?
Definitely. So currently we're working with a bunch of C stores. So Circle K is one of the ones nationally that we're everywhere with. EG America is another client, and ABC Wine and Spirits. The list goes on. We work with a bunch of convenience. We can do grocery as well. There's really no limitations as long as that individual wants to work with us to connect and go into their side. So I would say anybody is available. We can service anybody. We like to say we're a tech company, so we're here to solve solutions. So if there's a problem somebody's having, we're willing to go in, roll up our sleeves, and actually execute to figure out how we can do it in a more efficient, more effective process.
I think one of the things that's great, Mike, about what you're building is that it's a network effect. The more folks that are using it, the more powerful the tool becomes, the more systematic the approach becomes, and the better benefits the group gets out as an entire network as well. So for the distributors out there listening, as each one of you join, that's going to make the 99 Bottles product more relevant to your group. So if you're thinking about jumping in, it's like, hey, now's the great time because you're going to be able to expand quicker and have more access. In that part, one thing I want to circle back to, Mike, we didn't get to talk about yet is like, if somebody's going to join you, are you noticing that people are simplifying job roles or removing people from their workplace? Or is this more a redeployment of time and effort from team members to more value-added roles?
Yeah, I would say the last one is it's people come in and they think that the wholesaler's trying to cut bodies or really, but we haven't seen that at all. If anything, it's been a redeployment of just a reallocation of making those individuals more valuable on their end and allowing them to kind of grow within the business. So we get a lot of pushback in the beginning or when people are unaware or unsure of what kind of conversations that we're having of how is this going to affect me? And I'm not coming in here to replace jobs. I do not want to lower headcount. I really just want to provide value on your end so that people on the wholesaler side can either grow either in their career or just in general, like make it easier on them to allow them to do their current job at a high level. So we have a bunch of wholesalers that funny enough, we've had a bunch of leads come from pricing coordinators that say, I would love for this, to be added on our end so I can do these other things that I'm not able to do. And that was surprising in the beginning because you would think that pricing coordinators, wouldn't want something like that, but we're working with them directly and they're able to provide value where, didn't think they might know where they could because, they're doing other things other than just plugging away at a spreadsheet. And now they're able to actually do that and execute on it and show the value on their end.
That's awesome. So we got a few minutes left. Great questions so far from the audience. If you're out there thinking about another question, now's a great time to type it into Mike. Another question on my end, Mike, is that if people are excited about doing this, they want to get connected with you, what does onboarding look like? What does start for relationships, start first call conversation with you to when they're actually using 99 Bottles and working with you one-on-one? What's that look like? Give people a frame of reference on that.
Yeah, definitely. It'd basically be that we have a kickoff meeting to start and set expectations, go through everything in terms of what we need, either if it's identifying how we can get your pricing automated in our system, having us send all your files so we could review them, meeting with your team to figure out how we're going to meet. We're going to set up meetings, onboarding, depending on the account could take usually 30 days, could be 60. So it's in that 30 to 60 day window, depending on our own bandwidth as well. And then we just go over, everything needed that we need to basically assume pricing communication. So at this point, we're almost through, in markets throughout the whole country. So we're very familiar of how pricing needs to work. It's just a matter of tailoring it to your individual wholesalership. So we can work with you to identify, who's your retailer contact? How do you receive your files? Are you sending this file monthly? Is it a quarterly file? Are you then updating your own files quarterly and sending it over, or do you have to go in a portal? We gather all that info. We compare that to what we have been doing with other accounts that we have overlap on. Any new accounts, we go in and identify, what that actual process is. So I kind of touched upon it a little earlier, but, if it's reaching out to the retailer, like giving us some training on that, most of the time they're happy to do so. And we work with them and work with the wholesaler to get everything set up. And then throughout the onboarding process, you'll get updates weekly of where we stand with everything, what's still outstanding. We're trying to work with you to make this as easy as possible and want you to, feel comfortable in this transition. And then I say everybody, I give them my personal number. They need anything, they can call me directly. They could call my team directly and actually talk through if we're going through any issues. So we're trying to work with you. It's an ever evolving process. It's very fluid. So it's not a cookie cutter. This is how we have to do it. We're willing to work with you because each wholesaler does things a little different and we want to accommodate that.
That's awesome. How many distributors, ballpark it for us, how many are you working with right now currently?
Yeah, currently with our full service offering, we're touching almost 30 nationally, and we're getting a bunch of leads right now, so that's growing. So depending on our bandwidth, first come, first serve, and we're going to be expanding this. But with the addition through VIP, we're able to add more resources to really bring this offering to the masses. In the past, it was kind of a back end that we would talk with the wholesalers and only make it available to specific ones. But now we're happy to offer this to anybody, and excited to kind of work with potential customers down the road. And always I like to say it's a really relationship business, and we're here to make relationships. So I'm not here to make a quick buck and go down. I would love to build this from a strong relationship and have years of success, not just a couple months.
And what kind of wholesalers are the best fit? Like, what are some of the folks that you love working with? Size, scale, team, makeup, all that good stuff.
I couldn't say. I mean, I don't have to differentiate other than the fact that if we have people that are willing to work with us and that want to, see the success of that as well. So if they're, transparent, able to, communicate. We love wholesalers that maintain their route accounting system and make it as up to date as possible. But anybody that is willing to kind of have these conversations, work with us, and we're trying to help them out. So not from a pushback of we kind of push back on our end of like, hey, this is something that we don't want to do. So we're willing to work with anybody, and we've had success, little, small, large, big. We're people, people serving people.
Is data cleanliness something that a prospect should tackle first, or something that they do with you along the way during onboarding?
It's a good question. I think the best ones come in with the data already there. If it is messy, right, there's going to be some pain trying to clean it up, but that's kind of expected, right? So, if you have bad data and your processes are a little, not defined on your end, there's just going to be some, that growing pains of trying to like operationally make it as efficient as possible. But we're willing to work with you on that end as well and take a look at what that looks like. And if we can, provide some, somewhat consulting, because we've seen it so many times of how we've seen it and the best, super users are doing it. It tends to, wholesalers seem to value what we kind of tell them, since we see it all the time. And as long as they're willing to adapt and we're willing to adapt as well, I don't see any issues with, developing a partnership where both can hear each other and are willing to grow with one another.
That's awesome. So Mike, how do people, with a few minutes we got left, how do people get in contact with you? What's the best way to hunt you down and start a conversation with 99 Bottle?
Absolutely. You can go in on 99 Bottles and submit a ticket on our, on our website. If you're a user with 99 Bottles, you can, submit a help ticket and say you're interested in learning more. We can reach out and give you a demo. You can reach out to me directly at mfoster@nnbottles.com. And, you can feel free to give me a call directly, or, any way you want to get in touch that way. Or if you're, if you know me, or if we've had conversations and someone of, you can, get a reference. But email, call, or a ticket within our website or our portal will do the job, and we'll work with you to have those conversations and further the discussion that, that everything we went over.
Awesome. Well, thanks, Mike, for joining us today. It was great to learn about the chaos, the clarity of pricing. One of the things that I would have loved at my distributor is to work with you, because I would not have had as many problems or created as much drama as I did create when I was running pricing at my team. So
always a pleasure, bud. I appreciate you having me on. It's been fun, and look forward to hearing from you in the future. And I appreciate everybody's time today, and excited to talk to people down the road.
Welcome, my man. Stay dry, stay safe, and stay cool in Florida in the middle of the summer here.
Yeah, it's a challenge, but I'll do my best. Thank you.
All right, awesome. Thank you. So we're moving on to our next group of panelists. Y'all are stuck with me for one more cycle, where we're going to be bringing on a couple of distributors, and we're moving to the next 4 sessions that we've got are all panelist sessions for learn directly from distributors. And then we're going to end the day with some fun stuff and some suppliers in the non-beverage space, in the non-beer space. So first up on the docket for this afternoon, as we move post lunchtime, is we're going to talk about execution that sticks and how distributors are driving execution results. And I've got a couple of great friends of mine with us. We've got Patrick English, the owner and vice president of Dana Distributors, And then I've got also Tim Lodgen, the general manager and of Euclid Beverage. So boys, thanks for joining us today. Excited to have you both here. You both look great, by the way.
Great to be here.
So quick little intro for both. Tim, GM of Euclid Beverage, one of Illinois' leading wholesalers. He's got a 35-plus career spanning crossing distributors and suppliers, including working at suppliers like Boston Beer, Red Bull, and today leading the Euclid team, focusing on top-line revenue growth and supplier strategy and team accountability. And Patrick's third-generation owner-leader at Dana Distributors in Anheuser-Busch House in the Hudson Valley. Beautiful time of year to be in the Hudson Valley or in Chicago as well. And 23 years in the business. Patrick is shepherding Dana's shift to a GP, a gross profit culture, and a streamlining execution and compensation. So boys, thanks for joining us. Really excited. Setting up the discussion today, you have both changed the way you are handling your execution in your organizations. And that's what we want to talk about, is now growing, how we grow top line sales and profitability so we can continue to squeeze pennies and nickels and dimes out of our organization. So let's start with, what is the catalyst to change for both of you? Maybe Patrick, you kick it off first. What broke and what forced you to take another look at how you want to drive sales execution and change the model at Dana?
Thanks, Bud. I wouldn't necessarily say broke, but I would say it became pretty stagnant. Our compensation plans were based on set commission rates, no matter the GP of the case, and distribution targets that helped win supplier contests, but not build our gross profit margins. It got to the point where I could honestly, I can't remember at any time during any of our previous planning meetings with suppliers where they asked us, hey, how can our portfolio help drive your gross profit? So we looked at a way to change that mindset.
I love it. That's awesome. And Tim, you were kind of had the same inspiration at a similar time in different parts of the world, different parts of the business, and even different portfolios, but you came to a similar kind of conclusion, maybe not broke, but stagnant.
Yeah, I mean, the important one for us was, we'd always been focused on keeping the trucks full and getting cases out. And our portfolio has changed over the last 50 years, right? And it was more important for us to make sure we were selling those golden cases, not just every case.
Yep. And portfolio change over your time period of working in the business, I mean, you've seen all the folds of complex more.
If you want to call me old, Bud, I'll live with that. But yes, I've seen a lot happen in the last 35 years.
I'm the one with the gray beer around here.
True.
I love it. So let's talk about profits and or revenue dollars versus volume. One of the things that you both have moved away from is a volumetric exclusive look into some kind of a financial metric, either being Tim, revenue dollars, or Patrick, gross profit dollars. Tim, let's start with you. What was the jumping off point as well of like volume exclusively, moving to a financial mindset as well with your sales reps? Where was that motivation as well?
There's a couple parts to it. I mean, really for us, it was moving on from just a case as a case and let's get it delivered. Our suppliers have different business models, and it's incumbent on us as the management team to understand that. So we went with revenue over gross profit because not every supplier's business model works the same. What they do for us, how they participate with us, what they charge us for different items is different. So focusing on a lower, a high end, but lower gross margin percentage item is probably not something I want to task my sales reps to think about. I want them to be thinking about what's driving the top line. So for us, it was really moving from a case as a case to let's go after the cases that make a difference. And let's make sure that we understand that and let the management team manage, the senior management team manage what cases are the important ones.
And you've added some new products with your Molson Coors relationship recently that are more revenue driven. And it's been an easy conversation to like say, hey, these are more revenue driven for the sales reps. Why wouldn't you want to sell these items?
Absolutely. For our guys, it's now looking at here's the amount of dollars I drove top line for the month, and this is how I'm going to be compensated. It's not just making sure that they filled up every Keystone display. It's now making sure every Corona display, every Heineken display, every craft brewing display is full, and we're driving that volume.
I love it. And Patrick, you moved and you took it a step further and said, you know what? I want to move into a gross profit model and actually bring that data and bring that insight all the way down to the sales reps. We talked about revenue as well with Tim. Where was your jumping off point and where you wanted to move into that profitability mindset and just go another little bit layer deeper?
Yeah, I think for the first time in our company's history, we've actually assigned a true value to each case that the reps sell by showing them the GP. And by showing them that, they realize that not all cases are created equal. They quickly realize that even within a single supplier's portfolio, some cases of the same brand are worth more to the company than others. It was a difficult decision for us to make. We were unsure what they were going to do with that information, seeing the GP of each case. Would they show the retailers? Would they show other suppliers during ride widths? But a well-planned rollout and the explanation of how this new information we were giving them was going to become like the North Star of their compensation plan got them to buy in. It was scary. A lot of unknown is scary to our employees, but the comfort in the old ways of how we did things, I think, made it stagnant. We've made changes to our sales department over the past couple of years, whether it be segmenting sales reps to the different channels that we have in New York, switching from sales lead to fixed and variable rate, reimbursements, HR software, and all these things. And each time I've made a joke with them, and I said, look, I'm Captain Cortez. It's 1519. We've come ashore and I've burnt the ships. We can't go back, and we can't go back to the old ways of doing this way. And you asked a little bit about retraining and getting the reps to buy into this. And to be honest with you, not all reps do. And they get found out quick in making these changes towards a different compensation plan. And some of them try to swim home, even though we burnt the ships.
That's awesome. Now, when you made these shifts, both of you spent quite a bit of time talking about the training side and kind of the culture shift here as well, too. What did that look like in terms of education? And maybe we go back to Tim real quick in terms of culture, education, how that looked like with talking to the team about dollars and more detail, because you have to get people to understand this a little bit more than just a box.
Yeah, it was a lot of hand holding, right? It was a lot of being out in cars, out of the big rooms into personal, private, one-on-one conversations at the management level, starting top down, right? From me and our sales managers down through our district managers and channel managers to make sure that everybody understood it so that we could communicate it effectively to the guys who are actually making a difference on the streets. And it's a lot of hand holding. I mean, change is scary, especially when you're talking about your compensation and how you feed your family. So the great news was it's easy, right? If you sell more dollars, you can make more money. So it was the same basic principle we were doing before, and we married cases and revenue together, but it's pretty easy. And the way we do it with the daily updates that they can see in live, at the end of every day, they can see where they are before they start their day the next day. Makes it very easy for them to understand. This has been a challenging year to do volume planning, to say the very least, and revenue planning, but at least they have very clear understanding of where they need to get to.
Yep. And Patrick, culturally for you, same kind of vibe?
Yes, and like you said, using the app with the BXP app and having it on their phone, their devices, you get the culture of the younger sales reps that are new in the industry. It's not like the old days where the guys are holding bricks up to telephones to place orders. They're used to these smartphones where they can do everything the first second they wake up. They can see the news, they can see everything. It became, I'm also going to look at what my VXP score is and how I rank there, similar to a video game, which is what that culture of these young reps are used to. They want to beat everybody and they want to see how they did the prior day. And then they're already setting their goals that day on how to get the high score, as you could say.
Gotta love it. Now, we're talking about the volume and profit or volume and revenue side. You both are also still playing around or in the space of what we call PFP, MBOs, supplier incentives as well, where there's still activity-based stuff. What did you strip away and what did you leave behind, or what did stick in that realm as well? And Patrick, let's start with you around that, maybe PFP mindset of an Anheuser-Busch wholesaler or in supplier incentive mindset. What stuck, what stayed, and what have you modified?
Sure, I'm sure there's a lot of AB wholesalers that are listening on this call and that have generations like my family, so they can relate when I told my father that we had an SEC in the sales department, and he asked me, what is the point of that job? What is the point of a sales execution coordinator? And he said, look, just tell the reps to sell the products that make us the most money. It's that simple. It turns out he was right. We just never had a tool like VXP to drive that down to them. So look, our SEC does do a very good job. I think a lot of wholesalers are overburdened with the amount of incentives that we're hit with. So he does a very nice job of communicating it to them and juggling what's important by using the app and having GP, volume, FPL, and then the last one being the objectives from suppliers, those incentives, all in one location. And so instead of, like the dozen different emails that they get sent out to the supervisors, which get passed on to the sales reps, where they're not reading those emails, they will get beat. But if you look at it on your phone every morning when you wake up to see how you scored and what your dollar amount is, they keep track of it. So they do a much better job of doing it that way.
That's awesome.
On top of that, for us, I mean, as again, a multi-branded distributor, having that ability for the guys to get up in the morning and see where they are in the big picture, the VXP numbers, where they are in their MBOs, where they are in the incentives, 3 separate tabs that are updated every day. It also allows us as managers to control the tail wagging the dog, right? We don't get every supplier incentive doesn't make it in, right? And we don't tell the guys about incentives that may be running that they're not going to be a part of, right? So we have a much better than we used to, much better control of what the guys are seeing, what the guys are trying to drive with those secondary and tertiary incentives than the old days when it was kind of, I don't want to say wild, wild west, but a little more loose in how that got communicated out to them. We are now very focused on making sure that we're doing the right things to drive our company's business and that the guys aren't deciding what's more important to them than what's more important to us.
And Tim, you bring up a great point around tail wagging the dog, where you've got suppliers driving execution at the business or kind of leapfrogging around what maybe senior management at a distributor wants to get done. And additionally, like what ways, and help us understand what processes or ways you have provided pushback to your supplier partners with a rounded corner. We are their partners. They are very important to us. But where we may not, I call it 95-5. We're probably aligned 95% of the time, but 5% of the time, we got to be maybe more nitpicky in today's world. How's that work?
Well, I have a couple pet peeves in that world. I mean, the one that I always bring up is, as a good distributor, you've got to understand your supplier's business model, just like they need to understand yours, and you guys need to be able to work well together. One of my pet peeves is when they start paying for new distribution. No, I pay my guys every day to go out and get distribution. If you need us to get more distribution, then we will set a penetration goal and you will pay us or incentivize us to attain that goal, right? I hate you're lazy and you cannot be my friend, Mr. Supplier, if you are just paying me for new distribution. That's just a lazy supplier. So how you integrate all of that is to make sure that when we're talking to those suppliers, that their business model and what they're trying to accomplish, not only does it fit in with what we're trying to do, but they've done the work to actually make it an effective incentive. I need you to be at 50% on-premise distribution with this new brand is different than 500 new placements for me, right? I want those guys out there executing every day on what we're giving them the priorities for. And if the supplier wants to give us compensation for getting this done on the back end, then we will deal with that and we'll set incentives up for the guys to get it done. Does that make sense how I'm saying that, Bud? It is absolutely a pet peeve of mine that when suppliers are lazy.
I love it. And the other thing I love about it is you have such deep supplier background in your experience too. You come from the supplier world, working with multiple distributors, trying to negotiate these things and actually learning what works from a supplier perspective, and then back in the distributor seat, because you cut your teeth at the distributor too, back in the distributor seat, applying both perspectives, that you're meeting the industry in the middle of like, I get it. You guys want to get all this stuff done, but we got to be more strategic about it than just throwing this up against the wall like spaghettis and then want it to stick.
That's a great way to put it, bud.
Yep.
I mean, just do the work to be a good rep.
Yep. And Patrick, you're experiencing the same kind of thing. What's that push look like for you, for your crew as well?
I think now that we've moved to BXP and we focus on gross profit and our sales management has, it's a different conversation when the suppliers come in and they present to us. Because if they don't align with what we're trying to do, then our sales management is going to lose out on compensation. So it's a new conversation that they have saying, hey, look, this doesn't work out for what we're trying to do as a company. Just like Tim, and I agree, one of the worst pet peeves I have is I can't stand listening to a presentation for a new brand launch of a supplier, which fully aligned with to try to get it done. But don't tell me that we're going to roll out with a quantity discount and free goods and all this. We're going to build distribution. And then at the back end, after this kickoff, that I'm looking at a 24% margin, that doesn't align with what our company is trying to do. And it's going to affect your business. So then it's a different conversation that we have to have with them as leaders.
Yeah. Another topic we moved into as well is that this might be a little unsexy of a topic, but finished product loss, close to code, out of code, those are costs of doing business. You know, those are things that we have to spend money on, much like a cell phone for our team or HR work, comp and benefits. These are all things that we have to spend money on. You both have brought that mindset as like a governorship into your organizations as well to make sure that we're tackling the cost side of the business through the sales team too. Patrick, how's that played out for you? Because this was a fairly large shift at your team as well.
We've never really been able to track it down to the sales rep because everyone places blame on everyone else. It came out with a short date out of the warehouse, or that was one rep moved it from my market to the other market between underneath one supervisor. There's no real way to track it. The only way we did look at it is how much is being picked up. And we've always said that if we see 0 close to code picked up by a rep, that means either there is a ton of out of code in that route, or they're not taking the initiative or risk to sell in new products that aren't part of supplier deals and incentives. Look, not all distribution drives are well thought out and derived by some of our suppliers. And on the same side, I don't always sign the best distribution agreements. I don't pick winners all the time, but I'd much rather know that the product failed out in the trade than in the warehouse. So with this tool, we can see and set marks for everybody. Like, we need to see a certain cents per case picked up in the market. That way we know we're right on the levels that we're taking risks and selling in high GP items, but we're also picking it up and cleaning up the market.
Love it. And Tim, you brought the idea of like, we need to get to a point of the perfect order, right quantity, right product, right place, all at the right time. That was another thing that you really executed on with your team. How's it played out now in that evolution of your team? Because this was new for your crew as well.
Right. When we start talking about, like, you know, it's a complex issue, but you start talking about, we have budgets now for everything Patrick was just talking about, right? Out of code beer, beer that we've brought back or moved. You know, we've moved it from one account to another because it was going to sell faster in this account. These are all real costs that we were never capturing, right? So as we keep looking at that, and to Patrick's point, 100%, if the guy hasn't moved anything or he has no out of code, then that's as big a red flag as he's blowing away his budget and out of code product. You know, he or she is clearly not doing something right. But now that we have budgets for it, and we do it at the team level, so the manager is more involved and more knowledgeable about those costs to move stuff, the cost of out of code beer, what it costs to do a little extra discount to help move it through. All these items are now budgeted for. All these items are now at the DM level for us, so that they're working against those and they can actually have effective conversations with their guys about, you're not doing this right, or you're doing too much of this, or you know what, we oversold this as part of an incentive program or part of whatever. We all take the hit. and we're gonna do the right thing for everybody involved and move it somewhere else, right? There's a cost to that, but it's the right thing to do. So when we start talking about being that perfect case, I mean, it's such a variable account by account, right? And then route by route. How do you get it done so that everybody thinks it's the right thing to do? And it's that very fine balancing act, because you can, we'll be mad at you if you do, it's what I always joke about, our order inventory guys, the guys who are ordering beer from the breweries to stock our warehouses. The expectation is perfection, right? And if you're long, I hate you. And if you're short, everybody else hates you. So it's the same thing with our sales reps, right? Our expectation is perfection, and we need to give them every tool to be good at that. And working on revenue instead of cases gets the company do a better job of that. Giving them a budget for moving product around allows them to be better business people, not just box movers.
Oh, that better business people. And you are 100% right. The inventory folks, if you're long, we hate you. If you're short, we hate you. And if you're perfect, we don't even talk about it.
No, we don't care. Nobody cares.
Nobody cares at that point. Next subject, kind of pivot around, like we've talked a little bit about the technology you're deploying and how you're using technology, but really culture can eat technology for breakfast. Where has culture come into the play here with your team? Like, how have you guys leveraged the human side to drive these results, not just the technology to reinforce the learning and the understanding of it? So Patrick, maybe get started with you.
Yeah, I think that culture of waiting for a supplier incentive or for us to drive down a PFP for them to go for distribution isn't as important as it is now, only because they have the capability to see direct results of their paycheck and compensation by, for an example, if they look at an account that's doing really well with a 1.5 liter of a premium high-end water that the supplier or we put on their PFP last month is doing really well, they might say, oh, there's consumers here that love that product. That same supplier has many different packages of that brand. They can take the shot now, this month, on the 20-ounce high GP and sell it in. And they'll get rewarded right away instead of waiting down the road for and we all know reps have done this, like, oh, I'll wait for the next incentive and then I'll sell it in, I'll get the $10. It's a $1, $10 shot, where with VXP, if you do it now and build that GP in the account, you win this month and then you win the rest of the year. And by building that GP in that account, you're also growing the GP for the company. We're aligned with our goals. That's the culture it's become. I know a lot of my reps have reached out to you personally, and they like to send you pictures. Look what I did, bud. It's amazing how that has changed, where they don't have to wait for the if you get 10 placements, you get $10, $100, and they don't care, and it goes by. Now, but start selling it now. You're going to make money now on it.
Yeah, if I can add, what Patrick said earlier is the big one. Is the guys wake up in the morning now and look at their VXP score, and they look at where they rank, and they look at how much money they made, and at the end of the month, they're taking that screenshot so that they know this is everything I got accomplished last month. And, before we even finalize it in our paperwork, they know, they're telling their wives, girlfriends, mothers, whatever, that, this is the money coming in later this month. So it's changed that dynamic tremendously, as the guys, they aren't thinking about how many boxes do I need to sell, or how do I make sure my driver's not going to shoot me for being a dumbass today. They're actually thinking about how they can make money and how they can make the company money.
We got a few minutes left here. Questions from the crew, as you have them out in the audience. I wanted to make sure to prompt everybody. If you've got any questions for Tim or for Patrick, send them our way. The next piece is like money talks. Like you said, Tim, these are people's livelihood. This is what people matter. What's the right comp structure around this stuff? Are you guys doing base and at risk? Are you doing any other commission structures on top of it? Or, tell the people a little bit of a framework of where maybe you moved from and where you are now with how you're actually compensating your sales team, so they get a little bit of an idea that not only is it tech, not only is it culture, but it's also the dollars that make sense to hit people's bottom line and their W-2s.
So we're 8-9 months into this transition, probably not quite that much, but a year ago plus, it was strictly base plus incentives. And then part of that incentive program for us was doing a monthly PFP that was house funded. So roughly 70-30, 70% base, 30% commission, maybe 60-40, depending on the month. But during the summer, getting a little busier for us here in Chicago. What this has moved for us is we're still the same base pay, but now that pool of money that would come from the VXP, from our PFP, from our MBOs, and from our incentive program has gotten larger and easier for us as a management team to manage, and it's made it easier for the guys to see. So the next evolution for us is moving that even farther into the revenue stream for us, and that's probably a 2026 project. As we get into 2026, is how do we make more of the guys' compensation based on what they've sold, not just their base. So it's that salary. It's not good for us, at least. I don't see us going to 100% commission, but I just think it's that opportunity for us, for the cream to rise to the top. The guys who want to drive their business and drive our business are the guys we're going to compensate better.
Yep. Yep. Build a path for upside, always based on performance, accountability, and performance.
Yeah, it's the old joke, right? You want to make more money, sell more beer.
Yep.
We were before VXP, we were a third was base salary, a third was commissions, and the last third was like a volume target and a lot of PFP distribution. We've now gone to 60% base and 40% at risk through the VXP app that we fund, because we realized a lot of the commission that was built in, it wasn't at risk. We knew exactly what was going to be sold on the route. It was the only thing that we had over them to make sure that they were going after a target, which we've now replaced with them building GP in their route. So a big change there.
Oh, and
awesome. For VXP, I don't know if Tim said, we are 70% GP, we are 20% volume, and 10% finished product loss.
That's a blend across the two. Jesus, do we have any questions? I haven't seen any come up. I just want to make sure I'm not missing any as well. None for yet? Okay, awesome. So with the last little bit left, if anybody, for you two, either one of you is a jump ball, if anybody's thinking about making a change, what's the jumping off point that you had? Where would you tell them to get started internally with their team around, hey, these are the things I need to think about going into the planning season? I mean, we're in July. We're going to be looking at 2026 budgets, which is wild. We're already probably starting to do that in many of our operations, and any adjustments we want to make into the new year. Internally, where do you want to start? Where did your team start with the jumping off point of like, we want to do something different into the new year?
For us, it was, a year ago talking about how are we going to manage our business for the next 10 years, right? And are we going to keep managing the beers with our cutting edge 1988 technology, or are we going to jump into the 21st century? And for us, it was looking for a partner that we believed in and that we liked what they were providing. So for us, the next transition, I don't know when it'll be, but for us, it's to continue building on the path that we're on of moving to a revenue-based system, not just cases.
Love it. Awesome.
For us, it was looking at the future of the beer industry and the expansion of our portfolio, just not in one or two suppliers, but in many suppliers, and how we're going to manage that going forward. It's not like the old days where, my dad, joked, and Fred, they would look at the end of the month and be like, if it's red, we go back to work. If it's black, we go to lunch, kind of thing, like the old joke, looking at sales. So we know that despite any sales trends, future trends, that we know that we're in a much better place for growing our GP to help offset those trends.
And if I can add, the one transition that I've been personally, as the manager here of running the business, is much more visibility by supplier in terms of who is driving our business right now, driving our profitability, than I did through our basic route accounting software. So I'm much more comfortable investing behind brands, specific brands, than I was 18 months ago.
Do you think that changes the relationship, this level of transparency between your distributor, ships, and your supplier partners in any way?
I'm certainly more knowledgeable in my conversations with them, and I have that information at the fingertips, but we always try to be a good partner. So
for sure. Yep. Well, thank you, boys, for joining us today. This was a great topic around sales execution that sticks. We'll be moving on to our next subject from here, which is warehouse robotics, how we're going to actually have a bunch of little robots running around. Harry's the man to take us through that. So Patrick, Tim, thank you so much for joining us today. You two did a great job, and we will chat with you both soon.
Thanks, bud.
Cheers.
Thanks, bud.
All right, all right, all right. Well, now let's get into the fun stuff, robotics. Before I start, we just got, sadly, some breaking news that Hulk Hogan has passed away at 71. And so we wish all the folks over at Great American Beer our condolences. I just got a text from Terry Francis, who runs that business, and she says they're heartbroken, but Hulk will want us to carry on and do the work. So we'll have a statement from them. I spent some time with Hulk when he was in San Antonio a few months ago, and I got to say, he's got that gruff exterior, but he really is, he was a sweetheart, a gracious and charming gentleman. So we're sorry to see him go. But on to brighter topics, warehouse automation, where robots are going to kill us all. So, right, guys? So,
Sure.
Yeah, sure. Right. So this is the automation in action segment. We got Greg Koch, Chief Operating Officer of Adams Beverage, and Jeff Bertucci, Vice President of Operations and General Counsel of F.E.B. Distributing Company. Let me give a quick intro of you gentlemen because it warrants it. Jeff Bertucci is the fourth generation owner at F.E.B. Distributing, where he wears two hats, VP of Operations and General Counsel. He's an attorney and he's good at warehouse automation. You don't see that too often. Based in Mississippi, Jeff has led the charge on warehouse innovation, including conveyor automation, ACR robotics, and long-tail SKU consolidation, always with an eye toward labor efficiency, safety, and long-term ROI. He also chairs MBWA's Legal Review Committee and brings both strategic and operational expertise to this conversation. Greg Koch is COO of Adams Beverage, where he helps lead the digital and operational transformation of their Charlotte warehouse. I've seen it. I've seen some videos. It's amazing. Chris brings deep experience in process design and technology integration, from semi-automated pick modules to AMRs with LiDAR. He's currently implementing mobile robots to reduce picker travel time and increase shift productivity, all while building a collaborative team culture on the warehouse floor. We all know that picking has evolved from, riding on a tow motor, driving around the warehouse frantically, picking from different places. And it's just, with the long tail of SKUs, is that way of doing things is just, it's a little bit outdated. So before we get started, I'd like to run a video that Jeff sent me. Jesus, will you run slot 0?
So sustainability of a 4-generational family business,
Well,
figured you'd appreciate that, Harry.
yeah. Well, Jeff, why don't we start with you? You guys have a conveyor and ACR system to reduce manual handling. Can you walk us through kind of what you've got going there in Mississippi?
Yeah, so we have 2 locations here in Mississippi. We have F.E.B. Distributing on the Mississippi Gulf Coast and Capital City Beverages in the northern part of the state, central to northern part of the state. And you oversold me a little bit. My cousin Matthew Hessel, who is the brainchild, he's our VP of technology, is really the brainchild of all of this and has helped me out tremendously on the operations side of both locations. But we're probably we're about a 2.5 million case distributor here down in coastal Mississippi and about 3 million in Jackson. So we decided back in 2020 that we were picking in our warehouse, just like probably most people do these days, which was, voice picking, running a grid throughout the warehouse, picking from the ground up, building pallets, either 1 to 3 at a time, and doing a snake all the way around the warehouse. And we were really looking for an opportunity to cut down the hours of work that our employees were working, and maybe give them a little bit of better quality of life, and hopefully save some of the headaches that you see when you've got 10 to 12 individuals working on an island all for a 12 to 13 hour shift. So we use Encompass as our RAS company, and they offered their pick to light conveyor system. We launched that in 2020 at our facility in Jackson, and then 2021 in down here in Gulfport. Saw tremendous success over time. It was really gave us the opportunity to provide a more stable shift to our employee base that worked in the warehouse. We were able to do same amount of work in about half the time. It was actually timed pretty perfect too, when COVID hit, because I'm not sure we would have been able to get all the beer out that we all experienced during that time, at least in a reasonable amount of time. So just as that evolution has come about, we continue to look at things that are just going to make us more efficient from the receiving and the picking standpoint in the warehouse. We're all carrying a lot, many more SKUs. We certainly are here at our 2 facilities across, as you report weekly, Harry, many different beverage segments now. And what we found was we had a significant problem just managing the long end of the tail. Mainly our SKUs that, it's the 80-20 world. This was, 20% of our SKUs do 80% of our business. So how do we manage those remaining 80% of the SKUs that are doing 20% of the business in a meaningful, efficient manner that cuts down costs? So again, in working with Encompass, and now the offshoot of Encompass, which is now Block One, we looked at ACR systems. We started out looking at mainly the larger ACR systems to store full pallets. Our warehouse is not going to get any bigger. We got it about as big as it can be. So we've looked in at going up to maximize space. As we dove into it, looked at various different systems and sizes systems, we decided instead to go to an ACR system that just handled individual cases. So if you think of it, it's a big old box with multiple layers of shelving, and we have now robots.
Jesus, can you run slot 1?
So
we do have some video of your warehouse.
So
what is going on here, Jeff? What the hell?
At this stage, so you have ingestion and then you have picking. So you have to obviously replenish the ACR. So in this situation, we're actually ingesting. So the product gets put on at the end of our conveyor system, and it comes through this offshoot of the conveyor system over under 2 vision boxes, and is loaded onto a small AMR that takes the cases and puts it on the bottom layer, which we call cones, because that's what it looks like. And then eventually it is put up by a larger, what we call an RS8 that is just a big elevator and an arm that puts it up. So that's putting it into the system. And then when we turn to picking through the next shift, we reverse that cycle, and then it pulls it out as it's needed. All those AMRs work off of QR codes that are on the ground. So with the goal being, these are small volume SKUs. I say small volume. They're small volume in the sense that the daily velocity is lower than some of our heavier SKUs. Certainly they mean a lot to our business, or we wouldn't be carrying them.
Yeah, because they're probably higher margin as well.
Right, very much so. A lot of our wines, a lot of now hemp beverages, some of our higher margin craft SKUs are all things that go into there, and a lot of them are things that are needed for chain mandates that everybody can relate to. That maybe you don't move as many of them, but you have to have them for those larger retail chains that have them in the set. So with the goal being that we touch that beer as a few times as possible, and in this instance, we touch it when it goes into the system.
When you say that you touch the beer as little as possible, but the robots do touch the beer. And can you play slot 2? What is going on here? What are these little guys doing?
This is actually the reverse. So this is our conveyor is running. We're building orders to go out the next day. And these are just supplementing, or these cases are coming in waves. And usually the ACR system is picking 4 to 5 waves ahead, so that beer is already there when our humans that are on the conveyor lane are picking the volume SKUs, and it's just waiting for when it needs those cases. So this is actually what it would look like. And this is our Gulfport facility, which is why it's a little dimmer. We didn't replace a lot of lights because we didn't need lights. So so that's what it's doing right now. It's putting it's retrieving beer from the ACR that is on an existing wave that's going to go out on the order. And what you won't see here that you may have seen in the first video is that will go out into our general conveyor system, where it will eventually make it to the pallet builder who is at the end of the system, waiting for those cases to come. So instead of having people running around the warehouse on forklifts and multiple walkie riders, we have people that are sitting in one spot or one area all night long and working that area as the beer comes to them.
Got it. Okay. And Chris, you have kind of semi-auto case picking with AMRs and pick path consolidation. Can you walk us through what you guys are doing?
Yeah, it's been a genesis that we've done in Charlotte, our proving grounds of areas, how we bring in the automation into our facilities. So similar to Jeff, how do you handle the long tail, valuable products in our industry, on our trucks, but really painful to manage and pick and load up. So what we started back in 2020, we renovated our Charlotte warehouse. We added 75,000 square of CEW, and that was designated for our entree into automation. We partnered with Cirrus Tech. We have their semi-auto case picking system to handle our long tail. So it's a 3-level system. The first 2 levels are built out, the third's for expansion. And really what it is, similar, Jeff, to what you're doing, it's wave picking. So that pick mod starts up an hour or half an hour before the pick shift starts. So around 7:30 in the morning. And the pickers in there's 3. There's 2 on the second level, 1 on the bottom level. And they just go back and forth around a belt in a horseshoe. And they start at spot 1, and they get driven to what location by TV monitors in the pick module. And they put those cases on the belt. And then those cases go through accumulation, merge, divert, eventually the down lanes that historically are pickers or manual pickers or employees were driving, 50 million EPJs around, walkie riders. And then they would go to the down lane associated to their order that they've picked on the floor, the bulk, the volume, and they just hop off, right? So you think of all your pickers, rather than going to, 800, 1,000, 1,200 pick faces in your warehouse, our pickers are only going to 150 pick faces plus 1 more. And that 1 more could have 5 SKUs, 1 SKU, 40 SKUs, doesn't matter, because that's all being picked and coming out of the conveyor system. That's where we started and really kind of, tiptoed in. I went to a bunch of different shows, was walking around, and I almost tripped over AMRs. I was like, these things are really cool. I wonder how we can leverage this, right? So we don't have the little mini ones like Star Wars Jeff down down there has, but ours,
Little
we've got two different
R2D2s.
styles. Yeah. Two different styles. We've got kind of what you'd think of like a Roomba, right? A great big oversized Roomba that transports pallets throughout the warehouse. Our system's a little different. It's not using QR codes or anything embedded into the flooring. It's using LiDAR, which is a form of radar, to map the space almost three-dimensionally to see where obstacles are to navigate. It also allows for those bots to not have to make 90-degree turns. They can make gentle sweeping turns, which actually leads to more speed. So that's the one kind. With the majority of our bots are like that. And then we also have forklift-style robots that they do the same thing, but they're used to build pallets that we're expecting to be taller at retail, right? So your pallets that are going to grocery that are going to be still built on, brewery pallets, so 30 by 30, and it's going 50, 55, 60 inches tall. It's really hard to start when your pallet is on top of something to put cases up that high. So the robots know that this order should be higher than that. So we're gonna put in one of those forklift bots. One of the H bots goes in to take that task. So those bots travel through our 150 face conventional pick area, and now we position our employees to, rather than driving equipment around, they're stationary in zones, and they're being directed by the system to pick certain cases for that pallet. So if you visualize it, a robot drives around our warehouse, goes to one of Rehrig's solutions, the pallet dispenser, and it automatically kicks out pallets, almost like a reverse Pez machine, right? The robot picks up the pallet, it starts driving down the pick path, and then operators are getting tasked with jobs. They're getting a ding and a buzz on their handheld, and they're doing like they normally do with a voice pick, right? They're scanning the location, they're scanning the product, what have you, and validating where they're putting that robot. The difference is that robot leaves me, and now it goes to your section, Harry. So we're all collectively building the same order together, rather than the army of ones riding around the facility on their EPGs.
Okay, so instead of sending the warehouse picker out to the beer, you're bringing the beer to the warehouse picker, and these
to a degree, yeah, more of it.
These Roomba style things, I don't know if I had mentioned this, but I had a Roomba in my apartment and it escaped and it hauled ass down the street. We never saw it again.
Well, I'll tell you,
it said, I'm out of here.
Ours move at about 14 miles an hour, so you don't want to get in front of one while it's running.
Yeah, because yours don't have LiDAR. They can't see.
If you're not standing on the QR code, they'll run you over. Yeah.
Right. And so, when you introduced these automated systems, was it to reduce headcount, or was it to just maintain, or how did that work out?
So that's interesting. That's always a question that I'm asked. And the initial, everybody wants to be more efficient, to operate with less, if able to, right, to maximize our profitability. So that was the main focus and goal for us in putting in our first level of automation. But what we found is we didn't necessarily capture, we did save some FTE, not to the level that we wanted to, because what happened is the roles shift a little bit in the warehouse, right? I've got a pick module now that's 2 stories, usable 2 stories. And if I have a refusal at retail, if I have a mispick, if I have a misload, if I have more likely a customer that says I didn't want this, and that comes back to the warehouse, it's a completely different game in today's world than how I put that product away, right? I used to just assign it to somebody that's on a forklift or a walkie rider and just reverse logistic pick it. Start from the back, go to the front. Now I've got to take that pallet and I got to decide, okay, did it come from my conventional floor, or did it come from the pick module? If it came from the pick module, is it on the bottom or is it on the second level? Is it on the left side or the right side? All that plays into it and adds time, hence FTEs, to accomplish that, right? But what it did do is make it so that new employees coming in the pipeline, we make it so that within 15 minutes, I can have somebody come in off the street that can materially add to the productivity of our shift from scratch, compared to bringing somebody in new, having to go through training on EPJs, walkie riders, material handling safety, how to stack, how to layer, how to pick, how to build. You're talking 6 to 8 weeks, maybe, for somebody to get up to speed on what you need for them to be, again, materially benefiting the entire shift.
Right, because you have to, supposedly in some states, I think forklift drivers have to be licensed. I was never licensed. That's why I drove mine off a rail dock. But Jeff, from your perspective, the labor part of this, I think you mentioned that, during peak selling times, if somebody called in sick or something, like you say, you have to train somebody to do this. Whereas this is, if you can fog a mirror and you have a pulse and you have eyes and ears, you can
read.
Read.
We saw the same thing down here, and we used to say when we were voice picking, if you were down a person at night, you might as well add 2 hours onto the night, because there's just so much. There's only so much that you can do in that model when you're short staffed. And I think everybody has felt that pain point before, because you can't pull somebody off the street and expect them to understand the complexities of what you're doing, let alone figure out what all these SKUs are to begin with. So what we found was we did not reduce FTE. I will agree with Chris. That's always your immediate ROI that you think of is, can we reduce headcount? We actually built this as we laid it out with the job positions that we needed to run the system. We had it with the current headcount that we already had. Now, maybe we were understaffed to begin with and nobody realized it at the time because guys were working 14-hour shifts, and that was just the way we always did it. But we were able to use the same crew, but we were able to shorten the workday for them. We were able to bring them in earlier during the day and let them leave earlier in the evening, where it wasn't a graveyard shift, which in turn gets you a better employee when you're hiring. And I will agree with Chris, when you did lose somebody, it was a plug and play position. It was, for our conveyor, the conveyor lane was the entry level position, because all we had to do was say, can you count and can you read? Because that's all they do is a light goes off at a pick location. It tells them how many boxes to put on the conveyor line. And they do that, they hit the light and they go to the next one. So, there was return that we couldn't measure when we put it in, like those things, like the minimizing lost time when you have a position open or somebody calls in sick, the better quality of life, where the stable hours, where we went, when we finally got the system up and running, we probably went 12 months without losing somebody on that shift, because it was just, they're running 8-hour days, and in the light times, we had our location in Jackson, we were guaranteeing them 40 hours because they weren't making 40-hour weeks. And that was in a 5-day delivery structure, where we only run 4 days down here. So there's a lot of non-quantitative measurements that
if I could add to that, Jeff.
Go ahead.
Yeah, I don't mean to cut you off. The other piece that we've found is breakage, right? Just things like that. You'd assume, all right, how's it really going to impact anything, right? But by shrinking our pick face from 800 to 150 and not having this big long serpentine pick pass and all these oddball items that you're trying to Jenga build and put on and off, and then a walkie rider comes whipping around a corner because he's snaking down this aisle and back up that one, and 3 layers fall off of it and get destroyed, right? They're not doing that anymore. We're making one turn. It's like NASCAR.
Turning a corner with a pallet of bottles when you're in a rush to load the truck. Yeah. I've done. You're just like, please no. Just you can see it just falling over.
The floor is a little slick.
Yeah, and then the beer gnats, and there's glass everywhere, and it's humiliating. Everybody's making fun of you. But also, I think if you're an outsider, I think what people miss is that beer wholesalers, they run steady about 80% of the time, but then you hit July 4th, Memorial Day, holidays, where you got to ramp up capacity, and that's where it seems like
Yep.
it comes into play to help.
And I can,
and also,
I
you know,
can just
because
say-
orders are coming in earlier now because of the way handhelds can transmit wirelessly. You can get orders earlier in the day, so you can start staging and picking earlier. And like you said, no graveyard shift, because that was really the hardest part about hiring warehouse people. Is, by the way, you got to work all night.
Yeah. And sometimes you may be still loading trucks or picking orders when your delivery guys are coming in because of whatever the circumstances happened that night. And I don't know, just talking about those elevated sales days. I don't know how, I'm sure Chris's system works the same way. I feel like our system works better when the cases go up, because there's one, especially on the core items, you're picking bigger amounts of a smaller set of products. But two, it's nonstop. There's not going to be a lull because the system takes care of itself. You can't take a break. And then what we also have found was we have more of a team mentality than we ever did voice picking, because voice picking it's a quote unquote individual sport. I mean, and if you're paying like we were commission on cases, they're all fighting for those cases to make their money or to make additional money. Whereas now there can't be a gap in the cycle, because then it slows everybody else down. So it forced our that particular shift to have more of a team mentality and a team culture, which raised morale. You know, people enjoyed working together. And it's really great to see. I always say that it's in those high sales volume days, those tough weeks, those long weeks where I feel like our people are at their best, especially in the warehouse. You see them kind of rise to the occasion. And then they get done and go, God, can you believe how many cases we picked tonight? And I've got guys that are still with me from when we put the system in, and they say, you know, some of the new guys are spoiled. The old guys are going, y'all don't even know. Y'all have no clue. We'd have never done this. We'd have been picking for 20 hours to get all this done. So,
well, here's an interesting factoid. Like before we started this, we were on carts, right? Way back in scary 2020, 2016, 2017, 2018, we were on carts, and we had the data at that point that those 4 pickers were damn near doing a marathon every night, because we weren't using, our facility wasn't built out to be able to do carts using walkie riders. So all of our pickers are running around the warehouse picking those carts. They think about the guys that were there then and look at it now. It's not even the same book, let alone the same chapter.
Well, let's talk about old timers, because I would imagine there's some internal resistance when you're making these kind of big changes to the warehouse. People have been doing it, you know, literally for 75 years the other way. How do you deal with the fear of job losses and retraining?
So I think you've open transparency for one. I mean, the system's not going to fix everything overnight, and it's not going to run well the first. I mean, probably took us 3 to 6 months before we really saw it click, because it's a total 180 from the way you've done things and the way your people that are on those shifts have been used to operating. So, you know, we were very transparent at the front end that this was going to be disruptive, that we gave them like the peek down the road. This is where we're going to head, and all of y'all are going to be better off for it. But we almost said it's going to get worse before it gets better. Because you have to put processes in place that are different than the ones you had previously. I think it's very, very important that you get manager buy-in, especially the managers in that shift, because they've got to keep the train on the tracks while you're getting up, learning how to use the system efficiently, whichever system you put in. And we turned over a manager during that time. He just, good guy, good manager the old way, just couldn't get it. And fought us on the things where we were just saying, stay focused, stick to the plan, stick to the process. but it did, and it came in the middle of the summer, 3 or 4 months into our implementation of the conveyor system, where we had a high caseload night and everybody's worried. And it was like, my uncle says it was like watching an orchestra. I mean, everything was just smooth for no other reason than they just kept plugging at it. And one day it clicked, and then they saw the benefits of that. And then it energized them even more. And we just kept continuing to build and build. But I think open transparency and making sure that your people know that you're out there and you're concerned and that you're with them. I had a lot of long nights up here. My father had a lot of long nights up here, because we were going to be here to make sure we got it right. So I think that was important too.
Right. Well, running up on time, but I have one more question about, obviously it's a big investment up front. How do you configure ROI on something like this?
I think areas that we spoke about already, right? There's intangibles that you find along the way. You can't really measure. I mean, you can, but it's difficult to measure what's the value of bringing somebody in off the street and having them be productive in 15 minutes. There's an immense value there compared to the alternative, right? We did save some FTEs. We made the process streamlined by incorporating other elements of technology and automation and everything else. We've made it so that our pick accuracy has gone up to near 99.9%. I mean, there's a lot of things there, Harry, that would kind of add into the bubble. The one thing that I would say is expect going through this post-implementation, expect 9 to 12 months.
Yeah.
Before you're really clicking on all cylinders.
And manage your expectations too early. Like I said, it's not going to fix every problem overnight, but it's kind of a long game. To Chris's point, I would say the other thing on the ROI that you can't measure is safety too. It's a heck of a lot safer. Not to say that anything we do is ever going to be completely, minimize every risk or mitigate every risk, but it's certainly safer to have people standing in one area or one spot all night than have them running all around your warehouse and 10 to 20 machines that have an increased risk of an accident. And so we've seen that benefit too.
Right. Just a bunch of forklifts racing around the warehouse is
driving off docks.
Something's bound to happen. Well, gentlemen, thank you so much for being on there. That was very informative and helpful, and I appreciate it.
Thanks for having us.
Thank you, Harry.
All right.
Hey, Ryan. Well, welcome back, everybody. Now we've got another panel. We're going to be talking about online ordering and the inspiration behind this for this crew was the tech is cool. The tech has been implemented. People are using it, but how are we driving results out of this? And we've got 3 great panelists. Fraser, Director of Lakeshore Marketing, Beverage. Awesome to have you here. Also, Brandi, Vice President of Marketing at J.J. Taylor, and then Jay Robinson, Senior Director of Brands at J.J. Taylor as well, too. Welcome you 3 to the panel today. Thanks for joining us.
Thank you for having us.
I love it. Awesome. So let's kind of kick it off. Online ordering isn't just tech, it's a strategy. Execution has moved this direction. How are the 3 of you using this as something that is driving results for your team rather than just a cute little thing that we launched 5 or 6 years ago and really started to talk about?
Do you want to start?
Fire away, Wei.
I can get going. I mean, like you said, I think the pandemic was the impetus for us to really get started on this. We were kind of in this situation where we couldn't reach out to our retailers, but we wanted to help them continue to survive, and we needed to survive as well. So that was the impetus, but it's really evolved into not only an ordering platform, but a better way for us to communicate with our customers and market to them. So I think that is, an important thing to keep in mind, that not only is it just an online ordering platform and a different method for you to get orders, but it's a really effective way for you to market directly to your customers as well and provide them with information.
Oh, that's awesome. And Brandi, over your 3 or 4 markets in Florida, tons and tons of customers that you're working with, you're really leveraging in really unique ways too.
Yeah, I mean, as Wei said, the pandemic kind of kicked it off, but we started finding it was a great tool for us to utilize to be able to spend more time with the customers. So instead of going in and doing our old school way of controlling those beer coolers, we used it as a time to let them do their own orders, be able to see invoices, see what we have, but to spend more time with the customers to be able to sell.
And Jay, are you using your route accounting software system? Are you partnering with a third-party vendor like Provi or Beer Board or something else to actually execute on the portfolio structure and actually getting this out in front of folks?
All the above, actually.
Really?
We, jumping off of Wei and Brandi is, for myself, we are a distributor like many across the country that are moving to a total beverage portfolio and not just beer. And the biggest thing that this platform gives us is the opportunity for our people not to be order takers, but to affect those orders and go in and sell. And they need time to do that as we get, brands that are not beer, whether it's RTDs, whether it's, we're in THC business. We are looking at NAs, stuff that takes more time to sell a retailer on and explain. That's where it's really driving that. So our internal RAS system, is hosting our DSD link, which is through Encompass, to do the online order. And we've partnered with Provi and other online ordering aspects because our retailers use those. So we want it to be a simple process for them, but a process where they can go on in their own time and explore our portfolio. So when our team gets there, it's not new news sometimes. They can jump off of that versus, we don't have the time because we got to hit an order cutoff, or we have, 18 accounts to hit today. This enables them to take their time and plan their schedule and route their schedule around selling, not order taking.
Awesome. And Wei, one of the things that Lakeshore is doing to support that selling effort is you're augmenting using some of the marketing features of your online portal and your online platform. So what's that look like? Who's really running that at Lakeshore? Who's kind of guiding that as somebody on your team, the brand managers? How's that all coming to life?
Yeah. It's certainly a collaborative process. It's definitely led by the marketing team, but we collaborate with our sales director and our brand managers to really make sure that we are enhancing all of the different goals that we have as a company. So it's a real 360 approach. So whatever we're putting out from a marketing standpoint, whether it's to our retailers or even to the consumer level, all matches up with what our goals are for that specific time frame. So for example, we have the most insight into all of the different events or big things that might be happening within our market. So one marketing tool that we might do that we're actually going to do right around the corner is, Lollapalooza is coming up in the Chicagoland area right now. We'll geo-target some campaigns using zip codes to different areas that are surrounding Lollapalooza to remind them that 100,000 people are going to be entering the marketplace soon. So they may want to make sure that they order up and have plenty of inventory. Little reminders like that. And also just super tactical things, changes in delivery dates for holidays, things like that we try and utilize as well.
I remember coming to Chicago once. I could have used the portal to my benefit. I showed up the weekend before St. Patrick's Day, and I told my wife, it's like, it'll be great. We'll be able to get downtown. We'll beat the rush of the St. Patrick's Day. I did not realize y'all turned the river green 2 weekends in a row. So I got a little caught off guard on that one. Brandi, on your front, you're using it in really interesting ways of actually creating some exclusivity around it to drive some, adoption and focus from the retailers where you can only come get this exclusive deal here. What's that look like for JJ Taylor?
Yeah, so it's a little time consuming because it's the start of a process, but we put together basically programs for our DSD customers that only DSD online customers can use For instance, our last one we just utilized was a Peroni glassware giveaway. Anyone that is purchasing new Peroni, whether it be package or draft, they would get a 6-pack of glassware that's automatically going to be shipped to them on that order. It's a lot of checks and balances to make sure they only get the one case. But it was great. We were able to obtain a lot of new distribution doing that.
And I love that that's like a thank you gift. One of the things in selling that we don't do a ton of, because there's some legal stuff around it where you can't give product away and stuff like that across different alcohol laws in different states. But that is a great thank you gift and a gift we can give to customers to drive engagement and drive adoption. It's really great use. I love it. And Jay, you loosely touched on like bringing people into a broader portfolio. In your role, where do you think your portfolio management, portfolio structure plays into the digital world inside of leveraging the online portal? And then also probably bring it back to the human side of like, hey, this is what we've got specials on or what we've been focused on with the portal. Also with the sales team when they're out in the field using that new time to sell we have back.
Yeah, I mean, the online, portal allows us to have deeper access to our total account base versus, like distributors may call it different things, but we have pre-sale where we have reps, there at least weekly, and then inside sales or e-commerce or long tailor C accounts, as you may call them, where they don't get to see a person that often. Online ordering allows us to market to those customers much better. And most of these retailers and operators, it's like online shopping or using Amazon. When they're on there in their own time, they discover things that we carry that they may have not known that we do. It also allows us to market them, on what we're doing for Big Rock initiatives as a company. So working with Brandi, we can make sure we highlight what's on MBO or what's on focus or what's driving our portfolio to make sure we're reaching those customers, which often help us turn those C customers into B or potentially A customers as they pick up more of our portfolio. So it's been a huge asset, not only in gaining some volume and some customers, but building out our total beverage portfolio and getting retailers awareness on non-alc, spirits, wine, things other than beer that help us be more efficient too as operators.
And Jay, help us peel back the onion a little bit more on that discovery of new products and kind of growing the customer use of online portal. How has that actually played out with the relationship and how a sales rep has changed their visits to these, C accounts or B accounts that are moving and kind of slowly growing? Like, are they keeping up with that knowledge? How are they leveraging it? And in the field with their one-on-ones when they're meeting with these customers too?
Yeah, I mean, that's actually the perfect timing for that question because we are, and Brandi really is leading the charge as she's taken over our on-premise business as well as marketing, but we have just restructured our teams to be focused on more of a territory rather than an account base. So as you look at, in the past, you were a rep and you had your 80 accounts and that's what you did. Well, now, in your area, if you have a C account that potentially maybe wasn't doing so great with beer, but they're a huge NA or a huge wine or spirits account, that rep is not prohibited from going in there and interacting and growing that portfolio. So the human element is playing off of the DSD element as we see these accounts sign up and we look at their orders. It's, we really need to be spending more time in this C account that we didn't think about a couple of weeks ago versus this A account that may be on autopilot to an extent. We don't want to forget about them, but we own the account. We're doing well. Let's move into here. So we're actually restructuring our teams to play off of the strength of online ordering.
That's awesome. So more geographically based than channel based.
Correct.
And
yeah,
Brandi,
I mean, still channel,
something...
like still on premise and still, certain class of trades, but that more geography where you're not just driving past a bunch of accounts to hit, the account you need to go call on. You can stop in all these accounts and help build the total business versus just your account base.
Awesome. And how about changing life for your reps at your team? You seen any differences with seasoned veterans, people who look like Harry versus the young guns out there?
No comment on that. Yeah, I mean, obviously, I think that's just, the way things go, that people that have been doing something one way for a long time are more comfortable doing the way things have always been done. So we certainly see that. However, the one thing that we're trying to do is to reinforce the fact that as a marketing department, we're really just trying to help and encourage e-commerce to provide information to the retailers to help them get to yes faster at the end of the day. That's really our goal as a department, is to help them when they get into that account to make sure that the customer may already have received a lot of the information because they're seeing it through the online portal. They're seeing what the different focus brands are. They're seeing the different events that are happening in their area. They're seeing what brands are new. They're seeing our seasonal lineup that, like we're actually talking about fall now already, believe it or not, even though it's 114 degrees here in Chicago today. So I think, part of it is just, it doesn't matter how long they've been with the company or what their age is. We are trying to market to them to ensure that this is a tool to make their lives easier. Like Brandi said, we don't want you doing the things that a computer can actually do. I think that's been, the theme through a lot of different things that you guys have talked about today. We want to make sure that our people and their brains are going to be used for really value added things, to talk about different marketing programs, to talk about new products, like Jay said, to talk about our enhanced portfolios and all of the wonderful things that we have going on, and to leave the stuff like old invoices or inventory or, simply putting in the order to the computer.
Now, any fears around, or how are you managing fears, if there are any, at either of your operations around spot checking orders? For the longest time, we have taken complete ownership as an industry over finished product loss, that out-of-date product, and that we bring it back if it doesn't sell. And that's also because we've largely, for the better part of 100 years of being as an industry, we have done vendor managed inventory. Now we're talking about the vendor or the customer themselves managing their own inventory. Brandi, is there any kind of a new SOP? Is it not a fear? Is it a fear? Is it something that you're talking with your sales reps around? Do you spot check these orders? Do you not spot check them? Is it more of an onus of that the retailer takes more ownership of their inventory and that it's really their problem to deal with versus ours?
It's a little bit of everything that you just said. So it's a little bit of a concern, and it's not a perfect system by any means. So our pre-sell, or what you would call our street reps, they are reviewing the orders to make sure the packaging is accurate. They're not missing anything. So that step has been working very well. It's not perfect, but it's about 90% well. As of for what we call our inside sales, our e-commerce accounts, we're not able to check those. We have over 4,000 of those accounts, and it's just not possible to check those orders. There are errors, and we do fix them, whether we send off days, have a rep go and help them. So that's where our system is not perfect. But after a while, they have been very receptive and understanding that we'll fix it. It may not be same day, but we'll fix it. But there is no perfect system right now.
Wei, anything to add to that? And
Same, yeah.
Team?
Same with Brandi. All of our reps will receive an email that they're able to review prior to it getting routed into our system for picking and loading. So they definitely have the opportunity to do that. Like Brandi said, not a perfect system, but we haven't had a ton of issues. And, if it's something outrageous, I hit 100 cases instead of 10 cases, that's going to get flagged at some point, even by ops. So generally speaking, if something does go wrong, like Brandi said, within the legal guidelines, we'll fix it because it was an incorrect order. But it hasn't been anything that's been so disruptive that we wouldn't still want to encourage the system.
And juice is worth the squeeze. That's awesome to hear.
Mm-hmm.
One of my big questions around this whole philosophy of moving to online ordering is, how do we as an industry deal with pushback from retailers that it's like, you want me to do your job for you now? Because this is a service that you provided to me for the better part of decades, especially if it were seasoned veteran retailers that are out there. And now you want me to log in and plug and chug and do my own inventory and do my own ordering. How are the sales team at your operations dealing with that pushback and kind of mitigating that resistance that might be out there from the retailer? Or am I completely off base here?
No, I don't think you're off base. The one thing that I would say that we really try and let the retailer know is it's really empowering them with information that they are going to regularly need. We want to really get, our goal at the end of the day is to get everybody on the system. Whether or not they're ordering off of it, we hope will come, but we just want them on the system so that we can communicate with them in a really effective and efficient way. And to me, that's the biggest selling point. If you want to have access to our full portfolio, what our inventory looks like for those items, what our pricing is, what our deals are, what's new, what's going on, this is the place to do it. And even if you are uncomfortable placing your order for now, there probably will be a time when you're going to decide, at midnight, hey, I'm just going to get my order in now so I don't have to deal with it next week. So I think that's part of the selling story is, hey, we're just trying to give you information at your fingertips. We're trying to empower you to be able to control your selling story, at your whim, 24 hours a day, 7 days a week. And I know, Brandi, you have a lot of good stuff to add to that too.
No way, you're 100% accurate. I mean, that's our main selling. And then our second tier that we unfortunately have to follow too is we remind them that their liquor companies, their food companies, their linen companies, they don't come in and do their inventory. And we just don't have the ability. And we remind them that we want to be able to sell them the best products and put the best features and programs together. And we can't do that if we're counting coolers. So that is some of the hard conversations that we do have to have.
Jay, do you feel like the sales team has stepped up to the plate at J.J. Taylor and really tackled that challenge head on in a really nice way?
Yeah, I think so. I mean, overall, I think we still have, and it's more Brandi's headache than mine, thankfully, but we still have, a few old school accounts that are holding on. But for the most part, I think us as a really significant craft distributor, and then during the pandemic, these conversations are much easier than they would have been probably 6-7 years ago. Because especially with craft, we have a lot of, on-premise accounts that do their own order anyway. They're just sitting with our rep and walking through the order rather than us taking it. So I think some of them, that are old school are holding on, but for the most part, I think once we sit with them and explain it, they're happy to do it at their own pace. And oftentimes, like Wei said, like they're taking inventory at 2 a.m, 3 a.m. It's fresh in their mind, and they know they can jump on and they can do an online order and complete it. So I think we're in a much better place than we would have been a while back. But I think our teams are great. We still have a lot of learning to do and a lot of education, but around that, they're taking the reins, and I think it's nothing but positive for us.
In Wei, you said something in our planning meeting around we used to give out these price books on a quarterly basis or somewhat of a regular basis, and they were basically stale the day that they got shipped. So tell the listeners more about how that practice has changed and what you used to do and what you're doing now, and how you've leveraged that as an added value sale to like, this is where you come to find this information now.
Yeah, I mean, it used to be nothing short of a huge bummer, I think, because you would basically spend, a week putting together what you thought was the complete product guide with, pictures of the product and descriptions and ABV and pricing. And you thought it was great until the next week a brand gets discontinued, or, you lose the brand or you add a brand. There's new products coming in all the time too. So it's virtually impossible to keep that updated well, I would say. Not to mention just the simple time it took to put it together and to type everything in and then to print it. The cost of printing was astronomical. At the end of the day, I'm sure we had these like 100-page books that basically expired the day after we printed them. So basically everything, especially if your online ordering system is tied into your RAS and your backend system, it's going to be constantly updating with the most up-to-date information. And I would say that that's an important piece as you get into online ordering to make sure that you understand is that you are going to have someone making sure that your product statuses are updated, so you don't have seasonal products out of stock, because that's not a great shopping experience, I think, for your retailer. However, if you keep up with all of that, it's automatic. It's happening already because you have to make sure things are updated in handhelds. So what the shopping experience is like for the retailer is constantly updated with the latest discounts, and like I said, all of the different marketing tactics that you can use as well. So I really feel that the day of that printed booklet is gone. We haven't done it in a long time. And when sales reps come and ask me for it, I direct them and say, you just have to get them on to our online portal. That's the easiest way. And it's really, honestly, at the end of the day, it's the best information.
They have to understand, is it in the computer or is it on the computer way? We're not sure which one it is, but it's
Both.
one of those two.
It's trapped in there.
So moving to another subject, Brandi, on your front, rep adoption training, you did something really creative to drive adoption on the rep side when you started really going down this path, so much so that Way may or may not have completely stolen the idea and might have implemented it already. So I wanted to kind of talk with both of you too around, Brandi, what you did, and then at Way, if you have actually implemented and seen any new learnings from that as well.
Yes, we decided to go live with an incentive. So I know 2 sessions back, one of your speakers spoke about, we don't want to pay people to do their job. And we did take that first approach, but we were only about 20-30% of an adoption rate. So we decided to do an incentive, and based on the percentage of your account base is what you got paid out, all the way up to $1,000 a rep, based if you were at 60, 70, 80, or 90%. And as soon as we did that, we seen double-digit growth. It was huge for us. So it got us to our tipping point where we needed to be.
That's awesome. And Way, have you taken any of that yet and run with it?
We are going to, Brandi, but for now, what I think I've discussed is we basically are incentivizing what people call inside sales or pro sell or telesell team, because that's really the most obvious choice for us to get onto online ordering. So they are incentivized to get to a certain percentage of accounts to be ordering online, and they're kind of our experts at the end of the day. So we have definitely incentivized them, and then we're going to do some other approaches down the road. Making sure every single new account that comes into our system is automatically onboarded as part of our new account setup process. And then just taking a look at those accounts that haven't either used the platform in a certain number of days or still haven't gone on board, and just kind of automatically signing them up. Again, whether or not they use it to order is one thing, but the whole marketing piece and the information piece, I think, is just as important.
And Jay, one thing we haven't touched on with your relationship where you're managing the portfolio and talking to suppliers a lot, how have you engaged with suppliers around, hey, this is the priority. We want to get you involved into our online platform as a supplier relationship too, whether it be marketing or whether it be talking in some way or running one of those exclusive programs that Brandi talked about as well. Are you leveraging that in some creative way with your supplier relationships too?
We are. I mean, we're still working out, how to do it, the best way, but we are. I mean, from marketing, whether it's around big events, as Way talked about, whether it's around, internal MBOs, or whether it's around programming that makes sense from big suppliers, is getting that out to the online ordering platform. And then with our supplier partners that are in the market, as they hit accounts as well, they're an extension of us. And so accounts that are dependent upon a rep or not looking at it, they speak the same language we do and are talking about the benefits of online ordering and how they can, learn more about it. Or Brandi and I work on some programs to drive, like she said, was a glassware program or a giveaway or something that touts that to highlight not only the long tail of the portfolio, but even our core business of the portfolio. So we just want everyone saying the same thing and on the same page, and consistency is what's really driving the success, across the board.
I love it. I see that as a huge opportunity for us as distributors to focus on that supplier relationship and ways to actually leverage the marketing piece that you're already doing and get benefit from it on a human level of like, hey, we've been featuring you on our online marketplace. That goes out to all these folks. Like, yeah, I know you might not be on the PFP program as much as you want to be, but these are the other ways that we're actually incentivizing our customer base to interact with your brands and grow your business beyond just paying a sales rep to build a display or build a point of distribution or anything else. So kudos
100%.
to you on focusing on that as well. We got a couple minutes left. If there's any questions from the audience, send them our way shortly, or as you get them. The last little piece is like for Brandi and Way and Jay, any lessons of things you three would do differently, would advise folks that are like, I've kind of hit a wall. I'm at a stopping point. I've hit a high water mark of maybe 20, 30, 40% adoption, and I need to get through to that next level. Any advice, things that you would do right now, today, to get more out of what you're systematically doing with your online ordering portal? Brandi, let's start with you.
For me, it's really educating our staff a lot more on the benefits and maybe utilizing 1 to 2 people at first to show the benefits of it. Really embracing the incentive program. People are motivated. Even your old school people can be motivated by money. And then I mean, lastly, I guess it's just that extra push of really moving around your people and finding out where their strengths are. So for us, it was our people and money that was the most motivating. Then that last piece was, as Jay's point, is the suppliers letting them know that we'd be advertising to help with that push as well.
Way, anything to add?
Yeah, I would say for us, it was just what I mentioned. The accounts that you're getting in, new accounts that are coming into the system, just put them on it to start. No questions asked, just put them on the system, let them know this is where you can find our latest pricing. This is where, you can learn about our features and products, discounts, all of that stuff. So there's no question. It's just part of the onboarding process. It's part of the benefits of being one of our customers, and sell it that way. It's a benefit of being our customer that we offer this amazing tool that gives you access to all of this great information. And then I think I echo what Brandi said about making sure that your team understands all of these different valuable things that we're doing from a marketing standpoint, and all the tools that are available through the system that can help them, again, get to yes faster. And these systems are getting smarter and smarter, I think, as we move along. They've got suggested orders. They can know about when events are coming and all of this stuff. So it's only going to improve as time goes on. And I think we've already seen that in the past, 4 to 5 years of being on, that, they're getting more sophisticated.
Well, great stuff. Thank you 3 for joining us today, talking about online ordering, real impact, real results. You 3 are the best. Great insights and great information. Y'all be safe in the heat. Florida for Brandi and Jay, and for Way. It sounds like it was a little hot up in Chicago as well. Just a little bit. So,
All good.
cheers. Thanks,
We can
everybody.
use it.
Thanks,
Take
bud.
care.
Thank
Bye.
you.
We good to talk?
I've got some snacks and tahini here.
Oh, what's up, Harry?
How you doing?
I was like, I don't know if I can say anything yet. Is everyone gonna?
Yes, we're here, Adam. Thank you, guys. Thank you, Joe Waters, for being on. So this is what we're gonna kick it up a notch here, because I remember it's about 5 years ago when Chris Stefansi called me and at Columbia Distributing. He's like, "Hey, we're selling dry coffee," and I was like, "Why?" He goes, "Because it's just extra margin. We're already in the store." So our final session today is of the Distributor Productivity Summit, and we're going out with a bang. This one's called Beyond Beverage. What else should distributors be selling? And we're diving into an area that's been bubbling up just under the surface for a lot of beer wholesalers: portfolio expansion beyond the cold box. So we've got 2 standout voices in this with us today. We got Joe Waters, who brings us 30 years of experience in both supplier distributor roles and is now leading DSD expansion for Tajín at Mexilink, with boots on the ground success stories in AB houses across the country. And we've got Adam Farmer, who's the CEO of the Farmer Companies, which is building a DSD-friendly snack empire, one iconic brand at a time, from Cabot popcorn to Guinness pretzels to Nathan's meat sticks, and much of it is distributed through beer wholesalers, because if Frito-Lay can sell DSD, why don't other snacks do it as well? So they're both here to share some hard-won lessons. And Joe, let's start with you. And let's see. So you've got Tajín. You kind of have a multi way of distributing it, but you're now starting to look at independent C-stores and restaurants and on-premise, and looking toward beer wholesalers to fill that gap. Can you talk to us about that?
Yeah, Taheen's done a great job in grocery stores and mass merch. We were finding our way into convenience and on-premise, but we just needed more visibility in there. I think our customers are accustomed to buying it in large format. There's a great example of kind of what we're looking for from the DSD system is they can get us those multiple points of distribution. That's kind of what success looks like in the C-store. Get us at the register, get us, merchandise with the beer at the beer bin and utilizing all of our points of sale within the store to really put it in the consumer's face. People know Tahine, they use it, they love it. They're just not always accustomed to getting it in the convenience store or the independent liquor store. And then also for on-premise, we needed some help. So that's why we started gravitating towards some of the Bud Network. We met up with them at Samcom. A lot of them expressed the interest in saying, hey, why don't we just bring Tahine on? People are already putting on their beers and their micheladas and margaritas, etc. It was a natural fit. So we've started in Texas. So we branched out to Arizona, California.
Right, because beer salts are becoming increasingly popular. It kind of started in the on-premise, but now people are doing it at home, and it makes sense to merchandise those together, right? I mean,
absolutely, yeah.
So, Adam, tell us about your partnerships with beer distributors and with suppliers. You have a brand with Guinness. How did you get into this, and what made you think about DSD with beer wholesalers?
Certainly, Carrie, really appreciate the time, and thank you for anyone watching and hearing our story. So yeah, we started, we like to say we have the simplest investment strategy or brand strategy in CPG. We love iconic brands that have a great reputation with consumers that we think can very quickly expand to new market verticals. We're actually from Vermont. So the first business that we started was Cabot Popcorn. And, understanding the snack space, a lot of companies, when they launch, you have to go the typical, wholesale trade route, going through the natural channel. And there's a reason, like you said, Harry, why the big dogs are who they are. It's because they have the horsepower and the capability, and the feet on the street to be able to do merchandising, off-shelf displays, all the great things that DSD can bring to the table. And we actually kind of dipped our toe in the water small. I shout out to our friends at Farrell Distributing here up in Vermont, and we're like, let's test this out to see how it does. And it proved to be a tremendous success. We continued building out our DSD network for the rest of New England. We got some really good partners, and we're learning as we go. Snacks are different than beverages, right? Where some retailers have certain ways that they need to get it. Some want DSD, some want direct. But you're able to do some very powerful things with the merchandising and the off shelves. And really, as we're looking to partner with our distributors, is we can offer so much incremental dollars on the trucks for up and down the street business. We got a whole suite, an entire portfolio of great brands that can cover, an entire salty snack section almost. And it's really been a fun ride thus far.
And, it's not lost on, I don't think, anybody that salty snacks and beer salt go well with beer. So there's an opportunity to merchandise them together. And Jesus, can you pull up that those slides I sent you, and we could kind of just scroll through slowly, and maybe Adam and Joe, y'all can see what's going on there.
Yeah.
While he's doing that, how do you get wholesale? So let's say you sign up a wholesaler, okay? And yeah, that's it. And how do you get their salesmen, because they're so used to selling beer, how do you get share of mind with those guys?
So, Joe, do you want to go first? Do you want me to go first?
Yeah, sure. I'll jump in. Yeah, it's always difficult to get share of mind in DSD and the beer wholesalers. Everyone has so many SKUs now, and it's just as hard with our brands, sometimes almost a little harder because they're used to going to the beverage door in particular. And now how do you get them to go look at the register? How do you have them look all around the store and talk about something differently? These are two, if you go back one slide, those are predominantly our convenience store packages that they showed there first. Yeah. our 0.35 ounce minis on the left and our 1.6 ounce Tajín on the right. Those are great in convenience stores, and they come conveniently packed, come out of the mother case you see on the right. We drop them right into acrylics for merchandising. So it's an easy product. It's a product that people know and love. It's an easy sell. But we help with the launch. We do incentives. I have TSAs out there working in the market to work with people. It's just trying to keep top of mind with the sales force.
Right. Adam, do you have anything to add to that?
Yeah, so similar to as Joe said, we're learning. I like to say we understand the DSD snack game, pretty well at this point. But total, that is a factor, right? Like the snack aisle is different than the beer aisle. It's a different type of merchandising. There's different things that that can be done. You're not just dropping cases or stacking them. Sometimes you have to go and stock shelves. And so what we like to do right out of the gate is, one, we like to make sure that our distributors are equipped with the necessary tools that they need to go out and win, right? Especially in the independent markets, especially with the retailers that all of the distributors listening on those calls, those independents that you guys are the greatest relationships with, that you can go in and get a yes that day. We need to make sure that you guys have the tools to be able to go out and not necessarily need to wait for a shelf reset, that you can, don't need to wait and for them to redo the aisle. So all of our products will come in knockout cases. We have different merchandising vehicles with, metal racks, that we can place, weekender displays. And so that's the first and foremost thing that we want to make sure that you guys have, arrows in the quiver to be out to go sell. And then the second is, yes, there's the education piece. We like to have, get a bunch of, get people to like what we're selling. If any of the distributors here are already selling our product or haven't sold our product, I mean, we make the best tasting snacks, period. I'm a little biased, but everything that we do is flavor forward. And, once people try it, the quality speaks for itself. And so we like to go and inform all the sales reps about how the product is made, what's the story behind it, what's the heritage of the brand, and then kind of teach them, a go-to-market strategy, like, where we could fit in weekenders. And so we'll have our team go out, do a kickoff meeting, spend a couple days in the market, do some ride-alongs. And then also, as Joe said, of course, we want to put an incentive in place, for the reps, so they're hungry to go out to be able and secure placement, as well as, the retailers. Give do different deal, an intro level deal that can make the rep selling job even easier.
Right. And are there regional challenges? Kind of describe to me like where you're having success and maybe where it's tougher.
Right. So we are, and like I said, we're learning this. When if we're just starting with Cabot, it's very strong in the Northeast. That's where the brand is, it really, along the East Coast. That is where it is 100%. People know it, they'll try it. As we start to extend out a little bit more, right now we launched, and these are learnings, right? That we're going to get better at as we progress. Making sure we have the right pack size. As we look to go out past, the Midwest. And into out towards the West Coast, like making sure we have the right size bag to be able to execute on. I mean, we've learned that's launching a $6 bag of popcorn in an area where Cabot isn't the strongest wasn't necessary. Like we're going to do it at a price to drive trial, and so those are things that we're consistently getting better at. And then I guess also, the other component of this would be is what type of chains and retailers are in, different areas of the country. Like Northeast is a DSD market. A lot of the chains there, they don't have space in their warehouse. They want DSD. So we learned DSD. That's how we went to market first. As we started building out towards the rest of the country, we ran into some problems. Like an area that's like 90% chain driven, like the Southeast, we couldn't fill it up, and we were put in a situation where it was like a direct or nothing type situation. And it was a hard lesson that we had to learn, right? And so we're kind of figuring out like where are the right markets to go DSD. It's bigger, obviously places that skew higher towards independents, bodegas, big cities, where you're not dependent on, 95%, one or two chains.
Right. Because I mean, if you're in Florida and Publix wants it direct, probably, or
right.
But
that was an exact problem we have. And, it was like we went down, we started talking to a lot of the distributors and we're excited about it. And, we were in a situation where Publix was like, we want the brand. The buyers, quote unquote, said, I can't do this DSD. I will be in trouble if I go DSD. And, so like,
right.
Now we're like kind of, as we're looking at the rest of the country, making sure like, okay, like, having those conversations up front, right? Like, we got to ultimately let the retailer choose. Like, we're going to try to push DSD where we can, but if there's enough incremental space, in the markets that you guys serve where, it's not like, Publix or nothing or Walmart or nothing, it could be a great opportunity to get incremental dollars for sure.
Right. And I mean, is there an opportunity in those kind of markets there's still plenty of independent C-store, independent retailers to go into?
I think Joe, I don't know sorry, I don't mean to, if you have any points, but on the snack side, and each distributor knows their territory better than we do, right? I mean, that's why we love DSD. I mean, there's retailers that we get into through DSD that we would never even know or think of to talk to by ourselves.
Right.
So, I think it's really up to the distributors to realize like, okay, is there an opportunity with these accounts, that we service, to be able to go out and sell some stuff. And this list is a little dated. I'm looking at it. This deck is a few months old. But yeah, we got some great partners, and some of them have worked a lot better than others. And we're trying to learn from the supplier side, like where could we have done this differently? And a lot of that, Harry, is like I said, with pack sizes, like launching, out in, the middle of the country with a $6 popcorn. We probably would have been better off at a $2.99 popcorn. And I've only been in, luckily I got a really good group of people now for our company that are helping us build our sales strategy. And, I kind of realized as our business, we're growing really fast. I've only been in CPG a few years now. Might not be the best person to build this thing out nationwide. And, we got a really talented team, of folks now that are really kind of guiding our products and what is our go-to-market strategy? What is the correct price pack architecture? And, just really focus on getting better every day and helping, being good partners with our distributors.
Right. And Joe, what kind of accounts for specifically beer DSD are you looking for? Is there an on-premise component?
Yes, there is. So all of on-premise is open for this. What makes this a little different is a lot of times the beer distributors are used to getting all channels of business. And this in particular, we're looking at just independent convenience, independent liquor, and then on-premise. A lot of the on-premise, I'm shocked at how many places I go into and they're telling me, yeah, we walk down the street to Walmart or Kroger or wherever, and we pick up tahini and we have it. So that makes it an easy sell because they're already using it. And what we use the DSD system for is, well, they're already using it for their beers and micheladas and margaritas, but how do we talk to them about Mexican candy shots or using it back of house for chicken wings or guacamole or getting it into the food and expanding the use beyond just what they're already currently using it for? Or we'd love to see a 5-ounce bottle on every restaurant table, just like you see salt or pepper or Cholula or hot sauce.
Right. Well, I'll tell you a funny anecdote. Thank you for shipping us this tahini to display. We left it in this event space overnight, and the kitchen took it into. It was gone when we got here this morning. We're like, "Where's our tahini?" And they just saw it and go, "Oh, we need tahini. Let's bring it into the bar or whatever." So we got it back. They can have it afterwards. But what? What are some of the like pain points of using DSD? I'll start with you, Joe.
I'm sorry, you said pain points?
Yes.
That share of mind, getting them to look at something that's different, going down a long list and saying, "Oh yeah, by the way, we have tahini." So over the weekend, I did the Texas restaurant show, and we had so many people come up to the booth, and I'd ask them, "Who's your distributor?" "Oh, we're with them." And they're like, "Oh, we didn't even know that they had it." So we like to try and get out on their ordering portal. If we can do a banner, we give them high res graphics so they can put our images on there so customers can find it, because a lot of people are doing more ordering on the portal as opposed to actual salespeople coming in, and just letting people know that it's available through the distributor. We got all sorts of sales over the weekend just by them knowing that the distributor had it.
Right. And do you guys run sales incentives with distributors or?
We do. So in the beginning, we would start at the kickoff and we would do an incentive, and we kind of saw that traditional boom splat. Everyone gets behind it, they make the money, it sells, and then it died off a little bit. So now what we've started to do is let's let them get the low hanging fruit, and then let's come back with an incentive to try and drive that harder to get at business. And we're also learning from the distributors. So in the beginning, those little minis there, that they were packed 640 count, so 240 sales was way too much for convenience stores, and that's what the feedback was. So we switched it to a 240 count. So as we're learning this channel of business, we're leaning on the distributors to tell us, hey, this works, that doesn't work, so we can change it so we can be successful. Because at Mexilink, we're not just tahini, we have hundreds of other brands. So if we are able to be successful with tahini, we can open the door to so much more to any of the distributors that are interested in selling things beyond beer.
Right, right. And folks, if y'all have any questions for these guys, you can put it through chat. And Adam, what about you? What kind of pain points do you see that you wish if you had a magic wand you could fix?
Or if I knew earlier. Yeah, I would say one is when you get with the big players, like making sure, it's hard to cover the whole chain on a lot of, with a lot of customers. And that, going into it, when we just jumped right in being like, starting to authorize off shelf, and that from a supplier, that really kind of slow, that can really slow growth. Like when you can't have an opportunity to get into a customer and you can't because you can't cover the whole chain. A good example of this would be think of a retailer that's like very, very spread out, like a Wegmans, for example, right? They're concentrated in Western New York, but then they got stores, like down a couple in Virginia and like, a couple, like 3 in Massachusetts, and like, okay, maybe we could do like, 45, 50% of them, but like, we don't really have a path to being able to get to the rest of them. And, the customer's like, I need it, in a direct and the whole chain. If you can't do the whole chain, we can't do it. That's a hard, position to be in as a supplier, because you understand with the distributors, right? Like we want to be able to get, build the business because we like the off shelf and all the great things that we can do through DSD. But like we also got to, be able to, like go into an influential account to build our brand. So now, like, as we're looking to it, like we're trying to, get out in front of these situations, and it's something that we're learning every day. And then another one it's probably not just with snacks, it's, service, right? Like, we all get some emails where it's like, hey, we haven't gotten, this store serviced in, 2 weeks. And then, we have to go and then figure out why that hasn't been dropped off. And, and that's something that the beverage people probably go through every day. But I'm trying to think like what ones from our business being snacks would be materially different than, what folks are used to in beer and non-alc.
Yeah, I would imagine that getting the merchandisers to remember to merchandise that part of the store.
Right.
Like I mean, my son was a merchandiser for an AB distributor for a summer, and he didn't know that they carried Ghost. I was like, "How's Ghost doing?" He goes, "I didn't know that was our product." I'm not
Right,
gonna.
these guys carry tons of, like, I can't imagine the amount of SKUs and inventory, management that goes into running, a wholesaler.
Yeah,
So
yeah. If
we
it's in
like
a
to,
different part of the shelf, it's hard to get him to go over there. But
right.
but so I would imagine, because a lot of times, like Molson Coors will do a cross promotional thing with like Planters Peanuts or somebody like that, which the wholesaler doesn't get any benefit from. I would imagine there's opportunities to do cross promotion and merchandising with your wholesalers because Tahine, you're kind of connected to AB, and then you have these Guinness pretzels. Is there any opportunity to get with those suppliers to do any kind of fun stuff?
Absolutely. For us, we have the Bud Light Chilada. So with the Bud distributors, when something comes out there, they have the ability to order point of sale that will give us space on top to put tahini in there. And then also for our liquor distributors, we have Pernod coming out next year with some exciting tie-ins, and that will give us merchandising opportunities there as well. So yeah, Tahine does a lot of programs with a lot of people, and that allows us to find other areas in the store where we can merchandise.
It seems like a no-brainer because they sell both of your products go well with beer, and it would be just an automatic impulse buy if you just played them together, I would imagine.
Yeah, the
Adam,
picture you're showing there is, I'm sorry, the Bon Bon Boom Pops.
oh yeah, what is that?
So just an example of, we have a lot of snacks and sweets through Mexilink that at some point may be available to distributors. And Bon Bon Boom is a very popular sucker that is now going to be co-branded with Tahine, and that'll be launching very soon. So that was just a little bit of a teaser. As some of the other items, again, it's a light item, it's good margin, and it doesn't take up a whole lot of space on the trucks. And your trucks and your salespeople are going to the spots where they need to be anyhow.
Well, I know in San Antonio that the spicy candies do really well. I mean, so very well, surprisingly. I mean, I guess not surprisingly. They do really well, and that's a good point that you make because, um, you know, most beer trucks are overloaded when they leave the warehouse every morning. And so you don't want to add any weight. These things don't have any weight. In fact, this one almost started floating up. I mean, it's a nice margin without adding any weight to the truck or a lot of bulk. What kind of margins do you guys see with something like this?
We give our distributors, I'd say, around, because we're working internally on like really trying to focus on a blended margin, between promo and everyday, where we're targeting around a 26, but it's also a high dollar ring item. The cases, we'll sell, for 37.20 a case, and sell for, our distributors will sell for, on average 50-40 a case. Retailer works off of 30, try to get our distributors kind of in that high 20 range, between everyday and promotion pricing.
All right. Okay.
And we're 25% to the distributor and 40 plus to the retailer.
Oh, all right.
I want to see it open up our popcorn and sprinkle some tahini in there.
All right. We'll check this out in real time.
Yeah, let's see that. Let's see if we got a Tahine co-brand opportunity here live on Beverage.
This Tahine has like this. So old folks, this might be some co-branding. I'm glad we brought you guys together. Oh, let me fit my dip out. Oh, that's good.
Good?
Oh yeah, that really is good. That popcorn is good. A little tahini on it. Holy shit! You guys got something good.
Joe, we might be onto something here, man. I told you.
I think you might.
I appreciate the plug, Adam.
You guys need to get together.
Yeah, we got to exchange contact after this podcast and come up with something crazy.
Beer Business Daily brings people together where deals get done.
Yeah.
Well, any parting thoughts that we haven't talked about?
Nothing on my, I just want to say thank you to all of our distributors that decided to bring us on. I mean, we got a good group of folks now that believe in our products and in our team. And I guess what I want to say to them and to the folks that might be listening that are potentially looking at bringing it on is like, we're not perfect, but we're getting better at this. Like, we want to give people the opportunity to make selling this stuff very incremental to their business. And, we want to do it in a way that's, scalable and, everybody is aligned and everybody wins. And, I'd say, every month, we're learning and we're thinking of better ways to merchandise and to sell and pack, all that type of stuff. And, there's a reason Frito is what they are today, right? And I think we have a tremendous opportunity to essentially build a company that can compete, with the right portfolio, with the right mix and the right partners, and the right tasting products. And, just thank you for taking the time and hearing us out. And, Harry, really appreciate you giving us the opportunity to speak here today.
You bet. You bet. Joe, anything from you?
Yeah, Harry, I wanted to echo some of the same sentiments. I wanted to thank my distributors for working with us, helping us to build this channel out. Everything was brand new, so we had to come up with push-pull stickers for the door convenience, and we came out with neons to put up an on-premise and coasters. I mean, things that sound basic to the business that's already out there, but was new to the Tajín brand. And we're evolving every day, and we're hearing what the distributors are saying. We're getting better. Every distributor that we add, we're getting a little bit better, and we're listening to them. And again, if we nail this Tajín right, that may open the door for Mexilink for many other products. So thank you, Harry, for your invite, and super happy to be here. Thank you.
You bet. Well, thank you, gentlemen. It was really great having you on because, listen, these distributors are already going to the account. And Frito-Lay dominates the category. Let's take something back from those mother scratchers. You know what I'm saying? And get some of that margin back into beer wholesalers and not on the Frito truck. So that's my ending thing. So, all right. Thank you, gentlemen, for being on. I appreciate it.
Yeah, thank you very much.
Thank you.
Peace.
Bye.
Last 15 minutes, we thought we'd get a beer with Tajín rim. Well, they call this dressed up in Texas, right?
Yes, they call it just dressed.
Just dressed.
Not
dressed
not
up.
dressed up.
Just dressed. All right.
Let's take a.
There we go. Gotta love it.
Oh, God, that's good. The way it hit your mouth. Well, so first of all, I want to thank our sponsors. If you go to the end of our program, you can see who they are. We don't just let any willy-nilly sponsors. We actually get a lot more incoming who want to sponsor that we don't accept. We want sponsors that distributors have used and actually have respect and that aren't charlatans. So be sure and check them out. It's on the last page of the program, and we thank them for making this all happen.
And Jesus, do we have a slide that we could show up of our sponsors too?
Yeah, let's throw it. There they are.
There they are.
And then right up front is VXP, which is, but no, I mean, seriously, Bud, I appreciate you helping and really partnering with us on this. Like I said at the beginning, I've been out of this game for 25 plus years. I felt like the longer I got out of it, the more less I grasped of what was actually going on inside these beer wholesaler warehouses.
You don't give yourself enough credit.
Yeah, well, it's been a while, but having fresh blood to come in and help me organize it, you got most of the speakers, if not all of them, you really helped with organizing it, and I thought it was a pretty good program. We'll send out a survey in the next couple of days so you can tell
the people will speak. Yes.
The people, will speak. But, one of the kind of the main themes I heard today is that, really productivity isn't just about headcount reduction. It's really about just making things run smoother.
Yeah.
and redeploying those employees to actually doing things that matter rather than just mundane physical labor or just stupid moving papers around.
Yeah, I heard value add
Right.
over and over again. And that when you're doing more value add and you've got more of that labor pool tied around value add, more and more of that money can filter down to the bottom line.
That's right. And I also, I felt like we had more actual distributors this time on, which I think is, hearing from the, and it's hard to get distributors to speak. So I really appreciate you guys that did speak, because they get nothing out of this, but it really brings it home to have actual case studies.
Yeah, great. And so thank you to everybody who joined us today as a speaker as well. We really appreciate the involvement here to share your knowledge out with the industry and with the people that came here. Huge shout out to everybody who came and watched today too. We worked through a little bit of technical difficulties first thing in the morning.
It would not be BeerNet if there weren't technical difficulties.
We survived many of the most catastrophic ones though.
Yeah.
So all around, it was an incredible day. I'm with you, Harry. The other thing I heard over and over again too is that change is inevitable. These are things that are going to continue to evolve. The pace of change is picking up more and more and more and faster and faster and faster. And these investments in these little tweaks that you can do, going back to like what Brandi talked about, and like how are you incentivizing your reps to engage with the online portal, maybe patting yourself on the back a little bit more as a distributor by leveraging your online portal to actually share with your suppliers like, hey, I'm doing more than just putting you on PFP. I'm going to showcase you an exclusive platform and an exclusive program somewhere online. There's all these little things that we can do that we just haven't thought about, and it was great to kind of share that with the audience today.
Right. And like I always say, not all of it's going to apply to everybody, but if you could just pull one idea from what you saw and heard today, then I feel like it was worth it. And so anyway, I appreciate you, bud.
Thank you, Harry.
And you know what? We'll see you probably back here in 2027.
That's right.
So cheers.
Cheers, everybody. Thanks for joining us today.
Thank you.
Yum, yum. How was that pop?